What's up, folks? Hello. Okay, let's see if we get some people coming in here. Check my audio. Hello, hello. Yep, it works. Let's play some intro for you guys while I wait for everyone to come in.
GETCRACK. Wake up, motherfucker.
Hey, guys. I'm gonna set up the thing here. I think we're about 5 more minutes until the close. It's been an interesting day, I think. Very interesting. Let's go see this. I think the only sector up today was oil. Yeah, got a nice pump from that one. All right, let me show you my screen. Here we are. So QQQ had a big drop right at the beginning of open. And we had some accumulation at the bottom here before moving back up. Let's see where we close at. 4 more minutes until the end. If you guys have any questions, just put them in the chat. I'll go over them later. You guys should have seen my previous show. Let me get the watch list for you guys. Yeah, you can watch this one. This was the last stream I did. Go over it. I'll do another stream tonight, which I'll go over more of the tutorial stuff. Three more minutes until the close. All right. Let's see what we got here. Another stock I mentioned was Zim. So we have the shutdown on the East Coast. I think this was a pretty good buy for now. Yeah, a lot of people chased it yesterday when some analysts upgraded the stock. But you know how it goes. After the news finally hits, people just sell right away. They're not holding that. But I think long-term structurally, when we see China up, so we can look at China right now. China's doing quite well, still very good. Last night, there was a holiday. It's basically Chinese 4th of July. October 1st is National Day. So that celebrates Mao's declaration of the People's Republic of China. So it was shut down yesterday. So we don't know what the real reaction will be. But every time there's a U.S. session, people just keep buying up these Chinese stocks right now. So I don't see really how it's gonna form a cause here. Yeah, it's just too strong. I think people just keep shorting it, and they just keep getting blown out the water. I'm not 100% sure when we'll just keep running out of buyers, but as long as there's buyers here, it's a bit too hard to tell. If you look at so right now the market isn't open in Hong Kong, so we don't have the futures data. So after today's movement, it should try to get to this blue line again. What's gonna probably likely happen is we'll form a new accumulation range in this area. This is where I would start thinking of buying Chinese stocks to trade. Okay. And we have several Chinese stocks to look at. They're quite volatile. So then we'll see how that goes. Okay, 1 more minute until closing, guys. Let's see where we're at here. You have to remember this today. Okay, we're closed. We've closed. So today is the first day of the new quarter. All right. So since Thursday, I sold about half of my long positions that I bought here and here over here. I'm thinking of buying more in this area, but it's kind of getting too close to the next Friday. We're gonna have on Friday employment data. Okay, that's going to be the biggest data we have yet. And if this strike on the East Coast lasts for about a week into next Monday, I'm pretty sure that they'll use the whole weekend. The media will use the whole weekend to try to push prices down. So let's say we have bad employment data. Employment data looks very weak. Then you couple that with the weekend where they're going to spend all day talking about like, oh, they heard negotiations going this way and that. They can manipulate it so they can push the prices down further on Monday. So if Friday turns out to be bad, then Monday, I assume, can be worse. Now, let's look at oil. Let's look at oil too. So these are the oil producing stocks. Very nice today. So you see this bottom being made. I bought a bunch of oil stocks on Thursday. It's been doing pretty well. So one of them is using the ETF Oil U. Okay, Oil U is one of the leverage ETFs I use. This tracks about 3 times the price movement of XOP. XOP is the ETF for oil and gas exploration. I use Oil U. Oil U right here. So I'll show you the gains I got so far from that trade. Yeah, right here. So I wish I bought more. I mean, I didn't know Israel was gonna get hit by a bunch of rockets today, but if I knew that, I would have bought tons more of this shit. Yeah, so 15.5% gains for less than a week's trade from Thursday. That's pretty good. Yeah, I wish I knew all the stuff ahead of time. I mean, I just assumed that this was a great time to buy for the long term. I was ready to buy more later on this month. We'll have to see. I guess we'll have to see how structurally it goes from here. I'm not sure how much the East Coast stuff will affect things. East Coast shutdown, but that might come into play. I think you have to look a little bit at the news for this because when it crashed on Thursday, it was basically the Saudis cut cut their price targets. They no longer cared about trying to reach 100 barrels per hour. They started increasing their production. So when you hear that, you have a pretty bearish outlook because supply is increasing, and also at the same time, we're not sure if the U.S. economy is slowing down. Now, Jerome Powell seems pretty dang confident about how things are moving in the U.S. economy. So I'll play a little bit of this right now for you guys. So yesterday, Jerome Powell was speaking at an economic conference in Tennessee. Let's So I think what he said here was pretty optimistic. So he sounds very optimistic.
In 2014. In 2018, he became the chair of the Board of Governors and was sworn in for a second term. He's had a long career in finance, and he's no stranger to navigating financial crisis, both at Treasury and while on the Board of Governors. Chair Powell will provide some prepared remarks, and then I'm going to invite him to join me on the stage for a moderated conversation. So, Chair Powell, please, the floor is yours.
Thank you very much, Madam President. I do have some brief comments on the economy and monetary policy, and then I look forward to our discussion. Our economy is strong overall and has made significant progress over the past 2 years toward achieving our dual mandate goals of maximum employment and stable prices. Labor market conditions are solid, having cooled from their previously overheated state. Inflation has eased, and my FOMC colleagues and I have greater confidence that it is on a sustainable path back to 2%. At our meeting earlier this month, we reduced the level of policy restraint by lowering the target range for the federal funds rate by a half percentage point. That decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in an environment of moderate economic growth and inflation moving sustainably down to our objective. Turning to the labor market briefly, many indicators show that the labor market is solid. To mention just a few, the unemployment rate is well within the range of estimates of its natural rate. Layoffs are low. The labor force participation rate of prime age workers is near its historic high, and the prime age women's participation rate has continued to reach new all-time highs. Real wages are increasing at a solid pace, broadly in line with gains in productivity. The ratio of job openings to unemployed workers has moved down steadily but remains just above 1, so that there are still more open positions than there are people seeking work. Prior to 2019, that was rarely the case. Still, labor markets have clearly cooled over the past year. Workers now view jobs as somewhat less available than they were in 2019. The moderation in job growth and the increase in labor supply have led the unemployment rate to increase to 4.2%, still low by historical standards. We do not believe that we need to see further cooling in labor market conditions to achieve 2% inflation. Turning then to inflation, over the most recent 12 months, headline and core inflation were 2.2% and 2.7% respectively. Disinflation has been broad-based, and recent data indicate further progress toward a sustained return to 2%. Core goods prices have fallen 0.5% over the past year, close to their pre-pandemic pace, as supply bottlenecks have eased. Outside of housing services, core services inflation is also close to its pre-pandemic pace. Housing services inflation continues to decline, but sluggishly. The growth rate in rents charged to new tenants remains low. As long as that remains the case, housing services inflation will continue to decline. Broader economic conditions also set the table for further disinflation. The labor market is now roughly in balance. Longer-run inflation expectations remain well anchored. Turning to monetary policy. Over the past year, we have continued to see solid growth and healthy gains in the labor force and in productivity. Our goal all along has been to restore price stability without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While that task is not complete, we have made a good deal of progress toward that outcome. For much of the past 3 years, inflation ran well above our goal, and the labor market was extremely tight. Appropriately, our focus was on bringing down inflation. By keeping monetary policy restrictive, we helped restore the balance between overall supply and demand in the economy. That patient approach has paid dividends. Inflation is now much closer to our 2% objective. Today, we see the risks to achieving our employment and inflation goals as roughly in balance. Our policy rate had been at a two-decade high since the July 2023 meeting. At the time of that meeting, core inflation was 4.2%, well above our target, and unemployment was 3.5%, near a 50-year low. In the 14 months since the July 2023 meeting, inflation has moved down and unemployment has moved up, in both cases significantly. It was time for a recalibration of our policy stance to reflect progress toward our goals, as well as the changed balance of risks. As I mentioned, our decision to reduce our policy rate by 50 basis points reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate economic growth and inflation moving down sustainably to 2%. Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. As we consider additional policy adjustments, we will carefully assess incoming data, the evolving outlook, and the balance of risks. Overall, the economy is in solid shape. We intend to use our tools to keep it there. We remain resolute in our commitment to our maximum employment and price stability mandates, and everything we do is in service to our public mission. With that, thank you very much, and I look forward to our conversation.
Hey, what's up, Gary? Yeah, so you can see in his opening remarks, he's still optimistic, very optimistic. Now, let me jump ahead to, I think, around 8 minutes. Now, you'll see how optimistic he really is.
Since the September meeting.
Since the September meeting, so most of the data that we'll see before our next meeting hasn't come yet, of course, and we can talk about that. But I would say, one thing worth pointing to is the annual NIPA revisions, which I thought were quite interesting, and I'd point out a couple things. First, as this audience will know well, there are two ways of measuring output in the economy. There are many ways, but two principal ways are gross domestic income versus gross domestic product, so GDI versus GDP. There's lore and there's research that says that actually GDI, gross domestic income, gives a better real-time reading. And for the last year and a half or so, GDI has been quite low relative to GDP, raising, for those of us who forecast the economy, the risk that the GDP will turn out to have been overstated and it'll get revised down.
So listen closely. GDI has been looking pretty bad compared to GDP. All right. So the income of people in America has not matched the production of America. All right.
To meet GDI. So that's been a downside risk that we've been monitoring. As this audience will well know, quite the opposite happened, and there were very large, adjustments to revisions to GDI, and there's now no gap between the two. In theory, there should be no gap. It's no.
So now GDI is matching GDP. Okay. So Powell's going to get really optimistic right here.
Statistical error in measurement. So that kind of, I would say, removes a downside risk to the economy. Secondly, it has looked as though consumers were spending more than their income. We see disposable personal income now being estimated up, and so that's no longer the case. Again, removing what we've been thinking of as a possible downside risk that the level of consumer spending might be unsustainable. So we look at that, and again, it looks, these were very large, healthy upward revisions to income.
So we had income was revised upward, spending was revised upward, but income was revised upward so much more so than spending that the savings rate came up.
That's right.
Even with greater spending.
Yeah, the savings rate too. So we think savings are now, there are more savings on people's balance sheet, and the savings rate is higher. So that speaks of more kind of background that suggests that spending can continue at a healthy level. I'll just mention
spending can continue at a healthy level. Now, with the East Coast strike, that may erode, right? That's going to be a headwind because inflation is starting to eat and chip away at whatever income increases people have right now. Now, the question I would say is like, how is that income being increased? Like, is it wage? I think some people have had large wage increases, right? Another thing too is that people work multiple jobs and they keep doing multiple jobs to increase their income. So it's hard to say what's going on here. And that's why you kind of see people saying economy sucks or economy is great, because it depends on what side you're in. If people are struggling to get more income, but they can get more income through increased, wages, then that's great, right? If you're probably more in the white collar side of things and you're in tech, let's say. Now, the other way is that you're on the low end side of things, and what you're doing is you're just trying to do Uber Eats, doing a side gig somewhere else, like tons of side gigs. But in either case, people are increasing their income. So that's why there's a buffer, right? Because the service economy creates this nice buffer that you didn't get when the United States was primarily a manufacturing powerhouse. All right.
And quickly, two other things that I thought were interesting. One was just another modest increase in estimated productivity. We can talk more about that, but of course we're watching the situation with productivity. Productivity is very important to potential output, and the question is, are we seeing rising productivity which will be sustained over a period of time? And of course, I think it's way too early to say that. Nonetheless, you do see some increase in productivity because we've increased income, but not hours worked. The last thing, and maybe the most significant, though, is there's a bit of a tension between the labor market data, which speaks of a cooling labor market, and the spending data, the GDP data, and which has been quite solid. And I would say that tension has not been resolved, unlike a couple of the others. Nonetheless, I would say, though, that if you take away from this, as I do, that you can be somewhat more comfortable with the spending data. That may also help with the employment data.
So if the economy, so GDI, it was pretty significant upward revisions. GDP also was revised upward somewhat. And so when there's strength in the economy like that, does that give you some sort of sense or more of a sense of security when you're seeing a cooling labor market that maybe the worst outcomes won't happen if GDP is still that strong?
So the answer is ultimately yes, but I would add, though, that I think there's a lot of thinking that the labor market may give a better real-time picture in some cases than does GDP data. So if you look back over
So employment still is the better indicator than GDP data. So this is why this Friday is very important, that employment data, because we'll have two employment datas, one this week and one the first week of November, which is basically a Friday the 1st. I think I'm correct in this. Yeah, November the 1st. And that will be before the elections and before Jerome Powell talks again. So that's why I would say you would have to be pretty careful about how you position yourself this month. It's going to be very volatile because we're so dependent on many things before the elections and before Jerome Powell speaks again. So hold your horses. If you're an investor, don't do nothing. Okay? Just keep in cash, bonds, whatever you have that's safe. Don't be jumping the gun and I want to buy this thing, I want to buy that stock. No. You can be patient. You can afford to be patient. So what if you missed a few percentage points? It's better to be calm and patient this month. Okay, guys?
Prior downturns, you'll often see that they weren't well predicted by GDP data, but they were by one or more aspects of the of the labor market. Now, we don't see that happening. There's really nothing that I can point to in the economy that suggests that a downturn is more likely than it is at any time. So we don't see that. But I would say seeing that there's more support for thinking that the GDP readings we get are solid, I think that does happen. It helps at the margin. That's not going to stop us from looking very carefully at the labor market data, though.
Okay. So I have a few questions here on unemployment. The first is related to the summary of economic projections, and then the second is related to state versus national rates of unemployment. So in the summary of economic projections, the median participant has the unemployment rate moving from 4.2% today to 4.4% by the end of the year. So continued drift upward. And yet the median expects that the pace of rate cuts will move down as the unemployment rate continues to move up. How do you square that picture? Or how do you explain that?
Well, remember that the summary of economic projections is really just a tabulation of the individual 19 participants. So it doesn't come from one sort of consistent thing. But I can tell you why I think people will have written up a couple more tenths of unemployment. It would just be that, as we've seen, the level of job creation is maybe not quite at the level it needs to be to hold.
Oh yeah, who cares about this? The loser's here. Yeah, who cares about this? Well, if you got no money, of course you don't care about this, man.
Unemployment constant given assumptions about supply. That would make sense to me. I think everyone at this point is looking at their forecasts and understanding that there are great uncertainty bands around it. But the SEP asks you to write down your most likely case, whether you want to or not. And so that's what it is.
So it's sort of a love-hate relationship with the summary of economic projections?
That's not unfair.
Not for you personally, but yeah. Is there
I would say sometimes people can pay too much attention to it. I will say, though, one thing is we do it, as this audience well knows, we do it once a quarter. And over the course of a full quarter, the old SEP can get pretty rusty, But for a few weeks after the meeting, after we write down the SEP, it's actually a pretty good read on what the thinking of the committee is. And one thing I will point to is that if you look at the path that people wrote down, we had 10 people at 4 cuts or more, or 2 remaining cuts. We had 19 people at 3 or more. But the sense of the committee, this is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided.
Okay, so Jerome Powell's kind of like trying to calm the markets here. He's trying to say like, oh, we aren't behind the curve. We're cutting aggressively, but, we're calm about aggressively cutting. So, that's very optimistic. He's still trying to smooth it out and try to say, change the narrative. He's trying to change the narrative. If anybody tries to say that the Fed is behind the curve, he's already going ahead of it and going, hey, the Fed knows what it's doing. Calm down. We got this. So let's see.
By the incoming data. And if the economy slows more than we expect, then we can cut faster. If it slows less than we expect, we can cut slower. And that's really what's going to decide it. But I think from a base case standpoint, we're looking at it as a process that will play out over some time, not something that we need to go fast on. It's more, it'll depend on the data, the speed at which we actually go.
Yeah. So before I get to that second question on the unemployment rate, I'm going to ask you a point blank question here. How are you thinking about the November meeting?
So a couple things. One, we have 2 employment reports and an inflation report coming in. So
2 unemployment reports. Remember that, guys. I said that, right? One this week and one November 1st. And both of those are before the elections and before Powell talks again. And so you have to remember, right, Stanley, that Ryan was of the opinion that because they cut rates at 50 basis points, that's a bad thing because that means they're behind the curve. Powell's still got this narrative saying, oh, no. We're calm, we're cool, we're not cutting aggressively because we think the economy is going to shit. So that basically goes against what Ryan's thinking is. We'll see. I mean, I know these guys are, they talk both sides of their mouths, but you still got to listen to them, right?
The main thing will be to look, when we get to that meeting, at the totality of the data, and we'll be looking at the activity data, the unemployment data, and the inflation data, and asking ourselves, is our policy stance in the place where it needs to be for us to best foster achievement of our goals? And I think we'll take everything into account, and we don't have that data yet. So that's the main thing. But the other thing is just, I wanted to point out, and I kind of just did, that it's a committee that we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
Okay. Question from the audience now. The regional bank.
Okay, I think that's good enough for now. Maybe I'll continue on this later, but I think those were the key things I got from that speech. It's really important to understand their narrative. The narrative is kind of as important as the actual policy. If they don't feel like they're worried about inflation, they won't actively try to say bad things to crash the stock market. Let's put it that way. When the stock market is overly inflated, that also generates inflation because people have a positive outlook on things. It's very psychological. When you see your portfolio being very good, you tend to spend more, right? A lot of people, they look at their 401ks or they look at their portfolios and they see everything's up. They're psychologically thinking they're rich, right? It's unrealized gains. They didn't sell anything. But because that stock market looks very good, they'll be like, oh, things are very optimistic, so I might as well spend more for Christmas, right? Let's put it that way. So if he didn't feel the necessary need to say, hey, I think things look bad, whatever, because he could have had a script that was actually trying to fight against the stock market gains we had so far, because the S&P 500 has made a new high and so he could have backtracked from 2 weeks ago. He didn't. He's keeping on the very rosy picture. So he's not worried about inflation right now. Of course, we have this East Coast strike. Maybe if it lasts too long, he might have a different take later on in November. We'll see. That's why I said October is not going to be pretty, because there's going to be a lot of narratives being spun before Powell speaks again. When you have a blackout period where nobody's talking from the Fed, the media can say whatever they want to push up and down the stocks. So I would say stay in cash and bonds if you're already in there. If you have long positions, be ready to sell them. Or hedge. If you have a lot of long positions that you don't want to sell because of tax reasons, okay, then hedge. You can hedge with options if you know how to do that. I can't teach you that right now. This is a beginner's type of thing, and I don't even use options, so I'm pretty lazy on that front. That's my bad. But yeah, we can discuss that some other time when we get the chance. Someone better with options, like John can probably describe it better, or Dennison maybe. But I think Dennison just uses options just to trade. He doesn't use it to hedge, so he might be not the good guy to do that. Yep, that's right. Yeah, Stanley. It is nasty moving. I always hated econ. I thought it was partly human psychology. It's really, they try to make it a hard science, you know what I mean? But it's so much a soft science as well. If you read Asimov, right, the sci-fi Asimov, you know, there was a subject they called it psychohistory. I think it was psychohistory. I think that really describes economy very well. Economics, political economics being tied together. I think that's what it's called, psychohistory or something like that. Asimov. So you can look up the Foundation series. So if you're really into it's really a dry series. I mean, you know, if you guys really are interested in the story, he's not really a good writer for that, like dialogue and all that. It's really dry. So a lot of you guys might not be, when you read it, you really won't get into it. But if you're really into the abstract, the theoretical, yeah, it does make you think a lot. Psychohistory. Let me see. Yeah, psychohistory. Yeah. Let me put it in here. Let me share my screen here. I'll go over it. Yeah, it's a slog. Yeah, I mean, that's a lot of the problem with sci-fi writers. You know, they really suck at writing dialogue to reel you in. So they all they're interested is conveying the ideas, and so it's like it sucks. It really sucks. Yeah, CKJ3 here is like, wait for the dip and buy the call. Yeah, we'll go over that a little bit. What the dip really means. What is the dip? And I think the Apple TV has a series, right? Like a TV show. But I think it's deviated. That's what I've heard, you know. I mean, if you can adapt it correctly and make it more interesting for the masses, yeah, it could be really good, but it's just so dry. Yeah, that a lot of people like wouldn't tolerate it. You know, I can tolerate it. I'm a nerd, right? So I can tolerate it. But if you're not a nerd, that just sucks. That really sucks. Oh yeah, that reminded me. You know, you had a great 40K summary. You know, Gary, you did a great job with that. That's amazing. You summarized it pretty damn well. I don't think anybody could do a better job of summarizing it. And it would be cool if we get people into that. I mean, I barely know the lore, but I think you did a great job. All right, so psychohistory is a fictional science in Isaac Asimov's Foundation. Yeah, Gary, it has a show. It's on Apple TV. So if you have Apple TV, you might as well check it out. I've heard mixed reviews on that, you know, but that series is really hard to adapt in general. Anyway, I think it's a challenge for some. You have to have a really elite writers team to really make that thing like appeal to both the purists and the newcomers, you know. So Three Body has two shows actually, Gary, and one by the Chinese government with Tencent, and you know, I think it's Amazon, right, that did the other. So they have American version and they have two versions actually. I don't know. You can compare and contrast them too if you feel like it. So anyway, psychohistory is a fictional science in Isaac Asimov's Foundation universe, which combines history, sociology, and mathematical statistics to make general predictions about the future behavior of very large groups of people, such as the Galactic Empire. Now, when you read those books and you look at economics, like economics could be when it evolves and becomes a more robust science. I could see it being like this, a psychohistory. And this goes into like how I would try to predict price movements, not only in stocks, but in empires, right? You can look at it like there's GDP, GDI, population growth, and things like that all mixed together. And you can predict like wars and calamities. You could try to like make a whole science about it, honestly. Yeah. Yeah, CKJ3, you should definitely start making your own series too. I think what I'll do is after I'm done with most of this basic stuff, I'll try to introduce them to the ICT method, and whoever wants to go continue on, yeah, they can refer to you and T Spells. I think T Spells also, she also does the same thing, even if she doesn't know it's from ICT. She also is trading from that same methodology when she does futures. So that'll be good if you and T Spells work together. You two can introduce people to futures trading. It is a niche. Yeah, yeah, it is. It is. And econometrics also quite uses a lot of advanced mathematics. So I think that's also a niche. Maybe it's not a niche now, but I don't know. I think it's still a niche. Yeah. Yeah, the problem with CKJ3, I don't think these guys are even ready for that type of stuff. I mean, yeah, you can keep giving like levels and things like that, but yeah, I don't think a lot of these guys just like want to even know like how to open a brokerage account. So I think we have to, yeah, I have to appeal to the ground level here, and then we'll move on. Anyway, that's good enough for that. Let's look back at the oil. So let's look at oil. Now, last week, the media said this. And Thursday, the 26th, this is what the media said. Saudi Arabia to drop $100 crude target to win back market share. All right. OPEC Plus committed to raising production on December 1st. Okay. Saudi Arabia is preparing to abandon its unofficial $100 a barrel oil price target as it gets ready to raise output to win back market share, even if it means lower prices. Right? See, the Organization of the Petroleum Export Countries, OPEC, which is de facto led by Riyadh, the capital of Saudi Arabia, has been cutting oil output to support prices along with allies, including Russia, who are together known as OPEC Plus. However, prices are down nearly 5% so far this year amid increasing supply from other producers, especially the United States, as well as weak demand growth in China. Now, remember that. This was on Thursday last week. Guess what China did Tuesday of this week? Or was it this week? Maybe it was like some other week. Damn, I keep like messing around with this stuff here. No, it was actually Tuesday last week. Actually, never mind. So China did the stimulus on Tuesday. Saudi Arabia on Thursday said, okay, they're just pumping more oil. Now, you see that? I know China is trying to increase their domestic demand. You know that Saudi Arabia is like, all right, I see you, China. You're increasing demand, so I'm just going to increase production anyway. But even with that, the oil prices dropped. And that, to me, is a good time to buy, because whatever quote-unquote bad news is probably the time to buy. You do the opposite of what the news tells you to do. So anyway, earlier this month, OPEC Plus agreed to delay a planned oil output increase for October and November after crude prices hit their lowest in 9 months, saying it could further pause or reverse the hikes if needed. The FT, that's Financial Times, all right? That's from London, Financial Times. That's pretty good publication, actually. Pretty dry, but if you really love finance and news, you can read that if you pay some subscription. Citing people familiar with Saudi thinking, reported that Saudi Arabia is committed to the group raising production as planned on December 1st, even if that means a longer period of low oil prices. Okay. So we see here that this was quote unquote bad news, right? Last Thursday. Now let's see what happened today. Crude oil prices rises more than 2% after Iran fires missiles at Israel. Iran launched ballistic missiles at Israel, blah, blah, blah. Oil market and geopolitical analysts have repeatedly warned this year that an Israeli incursion into Lebanon could be the tripwire that leads to a regional war with Iran. Oh, so within a few trading days from last Thursday to this Tuesday, we just flipped the switch, right? There we go. U.S. crude oil prices rose more than 2% on Tuesday, coming off session highs as traders assess whether a missile attack by Iran against Israel would lead to further escalation in the Middle East. Okay, look at that. Now, all I got to say from this is just noise. All this is noise. What really is the real news is that China has increased their stimulus packages to the domestic market. So domestic consumption in China is going to go up anyway. So structurally, it's going to move up. All right. And I'll show you this. Okay. So remember, this is what I did. This is my trade. I bought oil U at around 28. I got my 15.5%. If I knew it would change this quickly, I would have bought a ton more, but I didn't know that. Now, structurally, let's look at this. Crude oil follows gold, shifted by 19.8 months. So the gold market, if you push it up by about 20 months, predicts the oil market. Because what that tells you is that the gold is a leading indicator of inflation. Oil drives inflation around the world, but gold can sniff it out and tell you that inflation is going to come back. So if this is true, then crude oil should be having a good time from here into 2026. Now, does that mean like why is it increasing? I think the reason why is essentially China. Now, we're going to have like some smaller effects, but if the East Coast strike thing lasts longer than 1 week and it goes into 1 month, I doubt it. I mean, I think after a week, Biden's going to have to seriously consider shutting down that strike because it's going to really wreck the ability for Jerome Powell to decrease inflation, because this thing will just ripple on into next year. So whatever backlogs we have in the shipping, it will just like, so that inflation is hard to kill. Okay, guys, when inflation starts, it's just like Pringles. It's just you eat one, you keep eating more. It's just really hard to tamper. So you have to head it off immediately. And I think that's a lot of the criticism Ryan had with Jerome Powell. He waited too long to increase the interest rates. I think that's correct. Jerome Powell was like transitory, and that was incorrect. The transitory period was way longer than he anticipated. So when you have this strike going on for more than a week, I think, yeah, it's end game at that point where you're going to have stickier inflation. It'll put pressure on the Fed to decrease interest rates, even if the economy starts slowing. So when you want to do a soft landing, it is hard. It's never been done successfully. Okay, guys, it's really, if he can do it, he'd be the first guy to manage a soft landing. Every time people have tried this, it's always been a rough landing. It just crashes. The plane is just diving right into the landing strip, and you're just like bump, 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 bump. It's complete mess. So this is why we're in a precarious position. This was not good timing to have this kind of strike right now, when we're just about to head off and say, hey, we're going to start decreasing interest rates. And at the same time, interest rates does not affect the service economy. It just affects the manufacturing economies. So that's kind of a good segue for what I'm going to describe next. But for now, I would say you should be starting to look at a lot of oil producing companies. So Chevron, Exxon, stuff like that. I think, HB was buying Chevron around here, because 777 was telling people to buy Chevron maybe over 2 months ago. Yeah. So when it started dipping, he just started buying it. So yeah, this is definitely something to think about. I think Berkshire loves Occidental. Yeah, it went back down from 50 from 70. Probably also an interesting stock to think about, Oxy. And when we're looking at shipping right now, I'm not sure if it's just going to be resolved quickly or not. But in either case, because of China, this stock, which has a high beta, okay, and a high beta meaning it's very volatile. Um, here's a weekly chart. Okay, every candle is 1 week. You can see it's up 30% in 1 week, up 47% in another week. But it can also be down like a lot. Like this is down 10, this is down 14, and it's back up like 30, it's back up 36. So I'm not saying this is a stock for the people that have weak constitutions. All right, you better have a strong stomach for this fucking stock. This is not something you could withstand. But if you like to play, this thing could, the way the chart looks, it looks very nice. This is a bottom here. It made a lower bottom here, and then it's building energy for this next move up because it made a cause right here. It made a sideways move from May until now, and you got two catalysts. One catalyst is China, so they're increasing demand. That means they're going to buy products from us. Also, if the United States has good growth because the Fed is decreasing their interest rate policy, they're easing it, then that means the U.S. also will increase their demand. And you heard Jerome Powell. He said, like, he's optimistic. He says Americans have good savings. They have tons of savings. So this goes against a lot of the bears who are saying, like, Americans have wiped out their savings from COVID. But he's saying that because income has increased, there's a lot more income generated than being lost through inflation. Then fine. All right. Okay, let's believe Powell. Then if he's cutting rates, then the United States is going to consume. So both sides of the trade, China and American middle class, is going to increase their consumption. Then this shipping container stock, Zim, so they ship between mostly China and the U.S. through Hawaii. It's going to go up. And when you have the East Coast being shut down, there could be more contracts going through the West Coast ports. So Zim, I think, structurally looks good from a chart perspective. And from a fundamentals perspective, I think there's two catalysts that will easily boost this thing right back up to $90 per share, So, hey. But you're taking a risk. It's a gamble still. This is not for the faint of heart. I wouldn't be doing this. But I bought today at around $24 when it dipped today. Yeah, around 24. So I'm starting to buy. If it comes down to 22, I'll still be a buyer. All right, but if it collapses through this range too much, because it has to at least keep this level. All right, you cannot go below 21 and a half and say, like, all right, this is still good, because that's still a danger. We'll see though. We'll see. But I think this range has completed and it's ready to move on the next move up. So Zim, keep that in the back of your mind. I would definitely be buying as long as it stays above around 22. So it has to keep most of its price action at that area and above. Okay. The other thing to talk about is gold. So this is gold mining stocks. I think gold itself is doing very well. Yeah, it did well today, actually. Yeah, silver still. Yeah, silver's still a kind of a mixed bag. So I'm not comfortable until silver and copper follow gold. Let's see what copper's doing. Yeah, copper, same thing. So we have to wait a while. I think copper definitely very sensitive to whatever China's doing right now. So remember, China was closed yesterday. U.S. market seems to be bullish on China still. Doesn't guarantee anything overnight. We'll have to see if there's a follow through overnight in China. And then if copper and gold continues, that's good for the miners, because when you have gold mining stocks, a lot of them have a mixture of gold and silver, and the byproduct of gold mining is copper as well. So when copper is doing good and gold is doing good, that's really nice. The other thing you have to watch is energy prices. You don't want oil prices to go up too high. Okay, oil prices right now are still cheap. That means the cost of energy to mine gold is down. So the output is gold and silver and copper, very high. The input prices are affected by oil, natural gas, stuff like that. So you don't want natural gas and oil to be too high. Now, natural gas, let's look at that. So I told people to buy natural gas starting around here in July. So I've been accumulating natural gas through Boyle, and I've been doing a lot of buying between 10 and 8, mostly in 8 and 9. Right now, it's still hovering at 11 to 12. Okay, it's hurricane season. Usually, that's a mixed bag. Sometimes hurricane season is bullish for natural gas. Sometimes it's not. Back in the old days, natural gas was bullish on hurricane season because when the hurricanes went through the Gulf, they had to shut down the offshore drilling sites. But because there's not too many offshore drilling sites anymore because of the EPA rules, hurricane season has a mixed effect on natural gas. At this point, natural gas looks pretty good, but I still need to see it clear $3 per. Okay, this is three. I think this is 3 British thermal units per dollar or something like that, or $3 per British. Yeah, $3 per British thermal units. So it's pretty arcane in the way it's like priced. I mean, I don't know how many of you guys know about British thermal units, but in any case, hey, you just got to get above 3. I just need this to be above 3, and this is a spot price. Okay, so we'll see if this thing can break out of 12, 13, 14. I think I'll be comfortable if it gets out of 13, 14, and then move on to 17 to 20 range by the end of this month. If Trump wins the election, yeah, it can go a lot higher, but I'd rather sell before that happens. I think from there to there, I'll make a quick 100. So if I bought at 8 mostly, then yeah, that's a pretty good flip right there. So I think HB bought a lot down here as well. It's risky though. Now let's go on to some Chinese stocks. Let's see here. We got these 3: Tao, TAL, Edu, EDU, and GOTU. If you're into risky Chinese stocks, these are 3 of the first ones I'll recommend. They move very quickly. And what these 3 are is essentially the tutorial companies. Now, the Chinese government did not like that a lot of these tutorial companies were essentially, I guess, promoting inequality, social inequality, because very wealthy Chinese people were giving a lot of their kids many tutorial classes. And so that means they would pass their, state examinations quite easily. And so the Chinese government, from that standpoint, started banning them from doing that. Now they've reconfigured their corporations to do other things. So they recovered quite a bit, some of them. And I think the stimulus would further help these type of companies out. So if you're interested in them, I think these should be on your watch list right now. So any dip, I would buy. But remember, this is risky, it's high beta, but you can make a good trade out of them. Any good news could easily pop these things very quickly because they used to be in the hundreds, right? This one, GoTo, used to be in the hundreds. EDU used to be in 200s. It's 77 now. GoTo is now at 545. up to 9 at one point. It used to be in the hundreds. Tau, yeah, 9, 7 to 12. It used to be in 90s, in the 90s and 80s. So yeah, those three put on your watch list. These other two ones, because China is stimulating their economy, they also have put incentives to buy stocks. So they want the Chinese domestic market to buy stocks. Futu, FUTU, and Tiger, I guess, TIGR. Let me see what that is. Yeah, I don't know why it's TIGR. It's called Up FinTech Holding Limited. Okay, whatever. Yeah, whatever. Yeah, these two are basically like the Robin Hood of China. Okay, these two companies. So if a lot of the population want to buy stocks, it doesn't matter if the stocks go up and down in China, right? If they're really trading and actively putting their effort into increasing the domestic appetite for stocks instead of real estate, these two stocks, FUTU, FUTU, and TIGR, are going to be the leaders in that space. And right now, since this is weekly candles, so this was the first week when Jerome Powell started cutting rates, 13.8%. Then the second week, China introduced their stimulus, up 30%. And this week, still going up, continuing to go up 25%. So this is going to be a hot area right here. And there's more to go. I mean, it's still just $6 per share for TIGR, and it used to be 36. Futu is at 107. Okay, this won't go as far as TIGR, but all right, it's $200. All right, so it's still there. I mean, it still could go up. But so just put this on your watch list. We'll see how it goes. I'm sure there's going to be a pullback this month. When there's a pullback, you're going to buy. All right, you're going to buy. So keep that on your watch list. Now, the other two things you can watch for China are the two ETFs, FXI. Okay, I mentioned this before last week already. FXI, iShares China Large Cap ETF. These are the 30 largest companies in China. Right now, it's at a tipping point here. You can see right here, we're at a resistance, okay? This area is a resistance, so it's just hanging out here. I would expect it to pull back. And that's where we want to watch. We want to watch that it pulls back, and at that point, we can buy. The other one is KWEB. KWEB. KWEB, Crane Shares Trust. Okay, so this is where all the tech Chinese stocks are at. You're like your Alibabas, your Temus. All right, Temu, like PDD, is Pinduoduo. So we can watch these two ETFs for a little guidance of where we should be going here. Now, you can also juice up these factors. So Yin, YINN, the Direxon Daily FTSE China Bull 3X. What that means is this thing moves 3 times what FXI moves. So last week, FXI moved 18.5%. Yin moved about 59.31%. Okay. Now, when you look at KWEB, last week it moved 26.8%. CWEB moved 56.4%. So this is a cheap way to kind of say, hey, if you're trading, you can use these ETFs to juice it up. So you don't need to use margins, options, or anything. If you're lazy like me, you just see a quick trade, you can go like, all right, I'll gamble. I'll use CWEB because I'm just going to make a quick flip. These things you shouldn't use to do long-term investing. I mean, unless you really know that these stocks will move up in a straight line. They usually don't. They zigzag, zigzag, zigzag. Every time it does that, these things are not good to hold long-term. They're just good for quick trading. If you really want to hold something long term, you gotta follow CKJ3 and say like, okay, I see this ETF, I'm just gonna buy a leap. Okay, a leap option. So we can probably discuss that sometime down the line. But for now, you just know the ETFs, and then you know that they have equivalent leverage ETFs which go 3 or 2 times more. So CWEB again, CWEB is 2 times KWEB, okay, and Yin is 3 times FXI. All right, okay, that's good enough for now. Let's see what else to talk about. I think maybe it's time to go through the lessons of the day. So last week on Thursday, I introduced you guys to ETFs and I went through the spiders, okay? I went through the major ones. Maybe I should just review it anyway for you guys. Let me set that up. Let me just go over it very quickly for you if you guys missed it last week. Okay, so these are called the spiders. SPDR. They just pronounce it spiders. Don't ask me why. But these are the 11 sectors of the whole S&P 500. All right, now let's go through them. XLC is 8.86%. XLY is 10.11%. XLP is 5.89%. XLE is 3.3%. XLF is 12.91%. XLV is 11.6%. XLI is 8.51%. XLB is 2.2%. XLRE is 2.3%. And XLK is a whopping 31.7%. Technology. So of the 11 sectors of the S&P 500, technology is the one that drives everything. Okay. Now we go back to this. This is the crappiest of them. 2.5% is XLU. Very boring. Very boring. But the reason I highlight this, utilities, which is usually a boring. Hey, if you guys played Monopoly, remember what you guys did? You did real estate, you did utilities, right? Guess what? Did Monopoly ever talk about Amazon or Google or any of that? No, they did. But you see, real estate is 2.3%. XLU utilities is 2.5%. So the stuff. So that's why the board game Monopoly. It was designed back in the days when utility companies and real estate were dominant. But you kind of have to say like today's technology companies are utility companies. You can't do nothing without Google, right? Amazon. So Amazon Web Services, Google Cloud, or Microsoft Azure and all that stuff. You can't. You need them. So in a way, they are utility companies. So that's kind of why they dominate now. But I think you still should look at utility companies because we do need energy. And energy is not only for Green New Deal. So I don't care about that Green New Deal stuff. I don't care. Whether or not it happens or not, it doesn't matter. What really matters is AI. AI needs a lot of energy. So let me play this video for you guys. Let me play this video.
start with this. Will Wade and Dina Bass here at Bloomberg leading with this quote, this paragraph going into the weekend. The owner of the shuttered 3 Mile Island nuclear plant in Pennsylvania will invest $1.6 billion to revive it, agreeing to sell all the output to Microsoft as the tech titan seeks carbon-free electricity for data centers to power the artificial intelligence boom. Is this the beginning of something much bigger in this country?
I think so. I mean, look, there is a clear demand for, building data centers that can train these large language models at the scale that currently, we are not at. And what they're trying to do is focus on renewable energy. So all these large hyperscalers have goals around using, more renewable energy. And look, that's why they are going down the stack in terms of doing it themselves, because they know exactly the configurations for these data centers that they need, what kind of power requirements they have. And I mean, to me, this is a classic case of vertical integration. Microsoft owning the stack end to end, from power to chips to literally the software they're producing.
Have we had a big enough conversation about the costs associated with the power that's going to be demanded?
Well, so power in the end is still a regulated entity. Look, yes, they have, much bigger power requirements than they had 5 or 10 years back. But in the end, the government is overseeing that. They will get that support, and the government wants Microsoft to build large data centers here because they want to own the data. They want everything to be done onshore. So I think I wouldn't worry too much about the power costs. It's more the chip costs that they have to deal with, and that's why they'll probably go with their own chips at some point.
But to John's point, I understand that they're regulated entities, but if they're going off the grid in order to provide their own electricity, at what point do we have to start to look at the fixed costs that are increasing, that are having to be provided privately by some of these big tech companies in order to provide the reliable service they're promising?
I mean, there is no doubt that, their cost of goods will go up, but it's already gone up. And look, the big bet is that AI will drive productivity. Now, you could argue we are not seeing that productivity now, but in their end product, if they can offer a co-pilot that helps you, become 20%, 30% more productive, then companies or consumers don't mind paying for that. So the big bet is with this AI wave is it's going to drive productivity. And you're going to start seeing that 2 to 3 years down the line. Otherwise, you'll see some cancellations in terms of, the CapEx plans or what they intend to do in the long term.
Aren't new data centers on hold because they cannot connect to the grid because they're just too powerful? How much is this going to be basically the source of new deals? You have to get your own basically mini grid in order to operate.
Well, so again, I think, yes, they need that power. They need the large data center setup, and they need big AI clusters. I mean, remember, as long as the large language models keep growing in size and the next GPT-5 version or the Anthropic model is 10 or 15 times bigger, you need more power. And that's where, they will work with all the entities in the chain, whether it's energy companies, whether it's private equity guys. And those are the trends you're seeing right now in terms of, the partnerships that these companies are doing.
Okay, so I remember All Seeing Guy was talking about uranium, maybe a couple weeks ago. So let's look at uranium right now. Okay, so I think he said he bought it at the wrong time. So he probably bought it at the high right here. I started getting out of uranium at this point, and then when I saw I couldn't get up anymore, I dumped the rest of it, because uranium was a good trade from last year, March 2023, up until January. At that point, you're kind of like, well, all right. I think most of the move was already made by that. Now, we've had a dip, pretty significant dip, into August. We had a confirmation in September, and now it's bouncing quite well. So with that news you just heard, I think uranium could potentially be a good buy this month. Let's see if we get another dip down here and we could buy a lot of these uranium miners. So that's something we want to keep in our watch list. So this is the ETF, URNM Sprott Uranium Miners ETF. Something similar to uranium is lithium. This is my favorite company in lithium, SGML. I love this little guy. I mean, this thing is like a rocket ship. I mean, I didn't buy it at $2 and sold it at 40. I wish I did, but I mean, I bought it around here maybe 10 probably. Yeah, got around 40, and then I saw it making a little distribution pattern, and I was like, oh man, it's gonna sell off. So I just dumped the rest when it barely could get above like 35 up here. It's like, oh, okay, forget it. So now it's dipped back to 8, it's climbed back to 13. Looks like a good place to start buying. I mean, whether or not you believe in the green energy phenomenon, lithium is going to be the way we do batteries anyway for a long time to come. There's nothing that replaces it at this point. All the other technologies are quite advanced. It'll take too long to make. So this is something to watch as well. Lithium. So lithium and uranium, they're both something you should pay attention to this month ahead of elections, because I think as commodities go, this is pretty useful. So oil, lithium, uranium, anything in energy, as well as natural gas. I think all of them are going to be very important in the fourth quarter. Okay, I think I'm going to start doing our lessons now. So the reason I brought up those ETFs is because I want to talk about ratios, okay? Now you have to remember, there's 11 of these ETFs that span 11 sectors. Within those sectors are industries, but I'm not going to go that deep, okay, right now for you guys. All you have to know is that you can use charts to analyze where money is flowing, okay? And we'll just start analyzing some basic ones. Let's just analyze some basic ones. Yeah. And this is kind of like secondary information. So when we do the primary information, I look at the actual chart of the price. But when I look at secondary information, I can get some kind of, let's say, hidden data, right? So let's look at this. We know that the technology sector is about over 13% of the S&P 500 weighting. So 13% of the S&P 500 is driven by technology. If I look at technology, then I would think that the ratio of how technology performs divided by how the S&P 500 performs could give me performance. Okay. So I'll put this up here. Let's put a comparison symbol. Actually, no, never mind. I'm not gonna do that like that. Okay, let's do a new price, right, like this. Okay, and I'm gonna scale this down. All right. So let's go look back at the old days. Let me do a weekly. Yeah, week's probably better than a daily here. So make sure it's logarithmic. Make sure this is logarithmic. And yeah, I don't want to confuse you guys too much. I'm not going to explain that stuff for you. Why it's logarithmic or arithmetic or this and that. Let's just look at charts, okay? Let's just look at a chart. So this one up here is a ratio of how better technology performs against the S&P 500 as a whole. All right. Now, can we get some information from this? Like, does it give us any hidden meaning? All right, let's look back at the 2008 financial crisis. Could looking at this give me any clue that a crash was going to happen in 2008 or not? Let's see. Let's see. Yeah. All right. Let's see. So this is about the 2007 to 2008. No, I don't know. I don't see anything interesting here. I don't think it did. It didn't do anything. Okay. How about if I looked at this ratio? What's this ratio say? So this one, it's a different one. Okay. Let me reset the price. This is the Dow Jones transportation over the Dow Jones industrial. Why did I do that? This is what the boomers used to do back in the day. Now, when the United States was a manufacturing economy, what they would look at is how the transportation in the sectors of the United States compared to the industrial sectors of the United States. So the production side of it was industrials. The transportation was dealing with railroads and trucking, right? So if people didn't order as many goods, it would leave. Because if I was going to make an order for something, I would make an order for a part, any kind of pull in type of advanced order. If the economy was doing good, I would order more of it, right? So that means transportation would be doing better than the production side because you need the transportation to send me those goods. So if I was not ordering as much, the transportation side would drop faster than the production side. So that's what they would call the Dow theory. Hey, actually, there should be an article about the Dow theory. So this is an ancient way of doing things. Yeah. Let's see. Blah blah blah. This is good. I gotta find a simpler definition of Dow theory. Oh man, all these definitions are complicated. Like I just need a simple Oh, come on. All right. Come on, guys. Dude, why you guys overcomplicate this? All right. I think the Fidelity website has a nice easy one to follow. All right, guys. Yeah, let me share that for you. Yeah. I think this is good to cover because you guys should know this. This is the most basic of ideas that lead to what I explain later. What are the tropes? Let me see. So Trope said like, what are the go-to? Okay. Right now, I don't want to overcomplicate things. I use a lot of other indicators, but I would say that primarily you can do a lot of trading just by looking at candles and following the Wyckoff method. So if you're interested in the Wyckoff method, I start introducing it in the last video I did. And tonight I'm going to continue doing that. But right now I just want to cover ratios on this particular stream. And then I'll go back to talking about Wyckoff tonight. Okay. I don't know who's going to show up tonight, but I mean, I just want to hit out these streams like bang, bang, bang over and over again. And then if anybody has questions, we can go over things again and again and do repetition style where I just keep teaching the same stuff over and over because I just want to get the basics out, and then we can keep repeating the basics and going over, because I think this is very helpful, because you don't need a lot of tools to succeed in trading. Honestly, it's really just a mental game. You just have to, and I don't want to confuse you with indicators right now, but I can later if people want to do more advanced stuff, because futures with CKJ3 is with ICT method, and then what I do is more like Wyckoff and other things. And we could go further. I could do Joe Rabel's multi time frame stuff too, which is more complicated. It's a lot complicated actually, but it increases your timing accuracy, but you're going to have to study that more. And then finally, there's the mark indicators. The mark indicators are even more advanced than that. I barely know about them. I can kind of explain the introduction of them, but that's even more arcane. But to me, I feel like you don't need all that stuff to just beat the normal masses. All you need to do is beat the dummies. There's so many dummies out there that follow the news. As long as you can beat them, you can make quite a good living off of just like trading simply. You don't need to be very accurate. You know what I'm saying? As long as you're patient. Like if you're impatient, okay, then forget it. You're just gonna self-sabotage. But if you can be patient, you can be like me. Be very lazy. You don't need to be so accurate. I don't need to time the low exactly. I don't need to time the top exactly. I just need to make enough to beat the average person, and therefore I would beat the S&P 500 by some percentage points. I'm okay with it. I'm cool. I'm not aggressive, but everyone's different, and that's why I just try to be open. And yeah, I do use stock scanners. I would use stock charts. I'm going to introduce that towards the end of this month. I will show you how I use stock charts to like scan things. And that's why I like charts, because they can filter out a lot of noise and quickly narrow down where you want to be. And then from there, you can do your own analysis. You can do fundamental analysis. You can use options chain, because like I think the great thing about charts is that it's so easy to use that to just narrow down what stocks you want to look at, what sectors you want to look at, and then from there you can use whatever more analysis you want to do on your own. If you are a accountant, you can read 10Ks and you like doing that. Like Virgo, like she's an accountant. She probably could very well just analyze stocks from a fundamental point of view. But with charts, I could just like narrow down like, okay, skip this company very quickly and eliminate the wasted time where nobody has time to be looking at 500 companies and look at all their 10Qs every quarter, right? And a lot of that is like, yeah, you're not going to get the insider trading knowledge from that. I think from charts, you can try to find insiders who know beforehand what's going to happen. Hey, Virgo. There's no link right now. I mean, this stream is just for talking, like just me to you, and then we could have a Q&A after later on. So, all right, let's continue on with this. Stock signals given by the Dow. Okay. The Dow theory is a chart pattern that confirms uptrends and downtrends for stocks. The Dow Jones Industrial Average, which represents 30 of the biggest and most influential U.S. companies, has gained roughly 5% year to date on a price return basis as of mid-July. When was this thing even written? Oh, it was written like in July. All right. Okay, that's a bit behind last year's pace when Blue Chip Index has gained roughly 7% by this time. It's also well behind nearly 18% surge for the S&P 500. With markets broadly at all-time highs, many investors have questioned whether stocks can continue to rally on relatively weak market breadth, or if stretched valuations and other headwinds may put the rally at risk. Dow theory might suggest the latter. Might be suggesting the latter. Okay, let's see. So July 12th. That is interesting timing, actually, when this Fidelity wrote this, because July 12th was kind of the intermediate top for most of the market. Quite interesting. Dow theory is the foundation of technical analysis, finding patterns and trends mostly in charts based on market behavior and investor psychology. It was created by Charles Dow, co-founder of the Wall Street Journal and the Dow Jones Industrial Average. Dow, who died in 1902, used the analogy of the ebb and flow of tides to describe how the market acts. He believed that stocks moves in trends, similar to how waves crash onto the beach and leave patterns in the sand to show where high and low tides occurred. Dow theory is based on two indexes, industrials and transports. Here are the key tenets of Dow theory. The averages discount everything. They reflect all relevant market information. The market moves in waves and trends, and a trend is assumed to exist until evidence suggests it has reversed. Volume must confirm the trend. All right, there's a little picture here. Dow theory indicator. All right, let's see if this definition is going to be what I expect. If there is one critical application of Dow theory to know about, it is that the averages, the Dow Jones Industrial Index and the Dow Jones Transportation Index must confirm one another. For example, suppose that during a bull market rally, the transports made a relative new high, a price that is higher than the most recent data, which can be several weeks or months, as did the industrials. This would be considered a confirmation of the uptrend. Alternatively, suppose that the transports made a new relative high, but the industrials did not. That the averages did not confirm one another, both did not make a relative new high at roughly the same time, indicate that a reversal of trend could be on the horizon. Not only did Dow believe that the movements of the two averages must confirm each other, he also thought that volume for one or both averages must confirm the trend. For example, if a stock rises and volume rises, that means volume has confirmed the uptrend. Similarly, if a stock declines and volume rises, that means volume has confirmed the downtrend. Dow assumed an existing trend to be in place until clear signals conferred by volume indicated that it has reversed. Okay, see? Now let's look at this chart here. Dow theory now says, this was back in July of this year. Stocks have broadly trended higher this year, including industrials. Notably, the transports have not. In fact, the transports are actually down year to date. This divergence between the two indexes may suggest the bullish broad uptrend of stocks could be at risk based on this indicator. Okay, you see that? The transports are not following the industrials. So the orange is not following the blue. So let's go back to this ratio chart I just made. Okay, guys. So I said the transport divided by the industrial. So when you see this thing weakening here, the transport divided by industrials is going down. This purple line by the S&P 500, it's going nowhere. It's going sideways, actually. So I think when it starts dropping like this, you could already tell that in 2015 that we're going nowhere, or maybe we're going to drop further. And you kind of see that dip here in the S&P 500. So it led. So this thing was already dropping ahead of this downturn, sideways movement on this point. Okay, so Dow theory worked there. Now, how about the Dow theory? Did it work for the 2007, 2008 crash? Let's see. So the S&P 500 made a new high up here to September 2007. Now you have to remember Lehman Brothers and all those guys, they started crashing September 2008. So did it really work here? You can see the transport started dropping and falling behind the industrials all the way to December 2007. So that gave a clue that something might have happened. But apparently in January 2008, it started climbing back up. So not really a good signal at that point. Kind of a good signal, but not really. That's not really good. Not really a good signal. Now, how about COVID? How about COVID? Could this thing predict COVID? Let's see. Yeah. Yeah, it consistently went down all the way from here, December 2016 through 2020. I mean, it's not a very good indicator because, like, look at this. It started dropping, like, and going weak way before because the stock market still was trying to climb. I mean, it had a very volatile like action here, probably during Trump and Jerome Powell, because Trump probably doing tariff, talking about the tariffs was making this volatility. And then Jerome Powell was raising interest rates, causing the bond market to crash. So no, still not very good indicator, not very precise. Okay. So it is a indicator, but it's not a very good indicator. Let's put it that way. Let's see if we can find something else. So this is another indicator I use, which is promoted by some people. It's called the XLY over XLP indicator. So that means discretionary spending over staple spending. So how much are you going to spend for Teslas over how much you're going to spend on toothbrushes or toothpaste or shampoo? All right. So let's say you want to buy iPhone. That's discretionary spending over something you need, which is like, yeah, deodorant, toothpaste, toothbrush, stuff like that. So usually this ratio could tell something, right? Let's see if this was a good indicator, secondary indicator to tell. All right. So before the 2008, 2007 implosion, this is a much better indicator. Look at this. So discretionary versus like staples, discretionary was going a lot lower than how discretionary. So this was before the whole crash started. And so July 2007, we start seeing some issues. And then August, it kept going down. November 2007, it kept going down. It never went back up like the Dow theory suggested. Look, it just kept going down and down. So this whole time, this thing was screaming, you better get out of the market. You better get out of the market. So this indicator was very good for 2007, 2008. Let's see what else. Let's see. Did it do a good job for COVID-19? Nope, it didn't do a good job for COVID-19. So based on this, it went exactly the same time as COVID-19. Now, not a good indicator for that. Now, was it a good indicator for the 2001 to 2022 interest rate hike implosion? Maybe. So let's see here. So Jerome Powell started increasing interest rates around November. And then before everything went to shit because of the Russian invasion in, I guess, April to May, around here. So you see this kind of minor big top, and then it crashed right after in November, like Thanksgiving, basically. And then into December, it was pretty low. So it's an okay indicator for that point in time during the 2022 crash. So, but it's not really that good. Yeah, you can kind of say it's sort of okay-ish indicator for that. Now, let's look at another indicator. Let's look at another ratio. Let's see if we can get a better one. This one here. This one is a semiconductor to NASDAQ indicator. Okay, let me see. I think this one did very well for the 2020 COVID crash. Okay, look at this. So a week before the implosion of the whole stock market, I guess 2 weeks maybe. So the February, so January 27th, Monday, so that week, you had a big drop in semiconductors to NASDAQ. Now, semiconductors are kind of a commodity, okay, compared to the rest of the tech industry. The rest of the tech industry is like mostly software, right? But semiconductors, I would think, gives a more leading indicator, kind of like how the transports lead industry in the Dow theory. The semiconductors lead the rest of the tech industry. So you could kind of say this is a new Dow theory, where you have the NASDAQ as a whole, but you have to compare it with semiconductors, where when you order chips, it has to be done early. So if you know demand is increasing next year, you would order a lot of chips ahead of time. So if you think that something is wrong, you would know it for months to a year ahead. So when you see this, when you see people getting out of semiconductors more than the rest of the tech, you probably could have used this signal here to say, wait a minute, something stinks with COVID. Eventually, everything went well because like tech went back up. But still, you see, semiconductors was going sideways for most of the bounce and return. So semiconductors, you really have to have semiconductors participate for you to really trust a tech bubble, a tech resurgence. Let's put it that way, more than a bubble. So that's why these ratios are so interesting. You should try to make your own. There's so many types that you can figure out. Like, look at this one. This one is housing over the SPY, the S&P 500. So if housing is doing well, you can look at how real estate is doing compared to the SPY. You can look at this, how biotech is doing versus the SPY. You can look at a lot of ratios and try to gauge how much the interest rate is affecting the economy, because housing and biotech, which is heavily reliant on cheap loans to continue operating, and housing is dependent on mortgage rates. Like, how much is the interest rate affecting these guys? And even before the Jerome Powell cut interest rates, these stocks were doing way good, way massively good. So let me throw this away for you guys. Yeah, let's just do it. I was recommending like housing stocks for a while. I mean, the last time I recommended was probably in July, like here, like yeah, when it made this dip. That was the last time I kind of recommended buying into this, because interest rates are going to get cut. You got this final dip here, you just start rallying. It's kind of volatile a little bit, but still, it's made a new high. Compare that to like semiconductors, right? Like it hasn't recovered since July, but if you look at like home builders, home builders are happy. They're happy. They think everything's hunky dory. They can sell stocks of like tons of these like new family houses for like communities, and who knows what other developers they are. So you can ask Ryan more about that. Yeah, so this is going to be something that you have to look at. Now, the biotechs, now they're still stuck in this range. If I believe later this year that the economy is not crashing, we're going to have good stimulus, then I want to see biotech continue with the NASDAQ. Okay? The NASDAQ here, the QQQ, is 100 of the biggest companies. The XBI is the trash of the NASDAQ, the trash of the NASDAQ composite. The NASDAQ composite is like full of garbage. Not only 100 of the top, but like thousands and thousands of the garbage tech companies out there that rely on loans to keep moving. When you look at the QQQ, the 100 stocks, these guys don't really need loans. They can run on their own cash flow, especially these the magnificent 7 stocks, which is Apple, Microsoft, Google, Amazon, Nvidia, Tesla, and Meta. These guys can run on their own power regardless of interest rates up to an extent. So this is why you see the S&P 500 like really exploding. If you look at this compared to that, so let's say from around the start of this year. So from around the start of this year, S&P 500 is about 50% up. But if you just did 7 stocks, Apple, Microsoft, Google, Amazon, Nvidia, Tesla, Meta is Facebook, it's about 96. So if this is why, around this time, I was warning people to start worrying about selling. Because if you look at this chart, this kind of looks like Bitcoin, right? It's just like it's out of control. Any normal stock looking like that, you would say that's exuberant buying. This is exuberance. Way too much people huffing their own farts, man. And if you look at the S&P 500 by itself, you don't see any of the problems. But when you look at just the 7 leaders, and you have to remember, XLK, the technology sector, is 13%. You can obviously see, wait a minute. You guys have bought way too much of this stuff. And so it wouldn't have been a surprise that the S&P 500 started dropping here. Because that's a bubble. This is a bubble. Okay? When you see something like this, that's a bubble. All right. So almost at 2 hours. I think I covered enough for today. I'll put the link up if you want questions. You can ask me. The candles themselves represent the ratio, or the colored lines are 2 ratio. So the colored line is the S&P 500. The candles are the ratio. All right. That's what I tried to do. I don't know. It's hard to be clear about these things. Yeah, you see this? This is the ratio is the candles. This is just the S&P 500. It's just a single solid line. So, yeah. I mean, teaching this stuff is kind of hard. But I think you kind of get the idea. Let's see. Yeah, if you got to join a trading group, if Dennison has a good one, then yeah, you guys should definitely have a group together of people. I think later on, I'm going to make some model portfolios so it appeals to more general audience. But a lot of you guys should start planning things out. But Dennison kind of he just trades options on the SPY. So I mean, I don't know how much you guys gonna have a harder learning curve just to get to that point to do options. I'm just trying to teach just basic stuff right here. Let me put Dennison's Discord up on the link. So yeah, if you're interested in options and stuff like that, this is where to go. What's up, Garion?
Hey, Crack. Since you have the stock, the ticker reader right now, can you read one of these stocks for me right quick?
Yeah, what's that?
RIG.
Oh my God, this one. Holy
Yeah.
shit! I heard of this one. I heard of this one. Oh boy, this bad boy.
It's on a
You know,
downturn right now.
yeah. Ooh.
I'm thinking about getting it. Not gonna lie, it's pretty cheap.
Man, there was another one that was kind of a meme stock, like Indonesian.
Yeah. I know what you're talking about.
Oh yeah, Indo.
Yeah, Indo.
Oh!
Yeah, look it up right quick. Come on.
You go from like $5 to like $100 in like a day. You're like,
yeah,
oh,
hold on. Yeah, zoom into it real quick. This is Candle looking like.
Man, this week is going crazy, bro. It's 51%. Ooh, shit. Yeah, all right. I don't know, man.
No, not Indo, but I am doing orange. I am doing RIG. Okay. There's one more I want you to look at.
Yeah. Ooh, but it has a lot of volume today, though.
It does, but I'll look at it tomorrow. I'll look at it tomorrow.
Ooh.
That's another
quick. Oh man, this is bad. That's a bad boy. But RIG, yeah, maybe.
Yeah. I think it's 4JO.
What?
Yeah, hold on, look into it real quick. 4JO.
No way. It can't be start with a number.
I mean, it has a number when I was looking it up. It's probably something.
Shit.
It's Northern Ocean Ltd. I think they're an energy equipment service. Yeah, Ocean.
Oh, okay.
Yeah, 4JO right there.
Oh, I see. Yeah. Oh, fuck. Yeah, it's gonna be an OT. Yeah. Oh my God. Yeah, it's probably not like U.S. traded, so it's like
it's not. Yeah, it's not.
Yeah. Oh,
never mind.
shit.
I guess RIG it is. Jeez.
Man, these things are kind of like, oh boy. Yeah, they ship a lot of natural gas and oh man, yeah. Yeah, it is cheap technically. Oh man, fuck. Tropes did Indo. Man, you guys are crazy playing that stock. Oh shit.
Wait, hold on. What did he do?
He was a wait, you missed. I did a log on Indo, but I missed the window. What do you mean? He bought it at the top or some shit?
He probably did. You know what he probably did?
No. My God.
No, he probably bought it when the candle was high. That's what he did.
Oh shit.
Where the hell's my phone?
So I'm really gonna be watching China tonight. I want to see what China does.
Yeah,
when it reopens the market.
At what time? Yeah, what time is that supposed to be?
Or I think it's 6:30 my time, so that means 9:30 your time Eastern. Yeah. They don't follow daylight savings. You have to remember that too.
Okay.
Yeah, all that bullshit. Yeah.
Trope says USGOW.
What the fuck?
Okay.
What the heck is that? Oh,
I never heard of this.
What the fuck?
What is this?
You guys are doing more. Oh man, this is some penny stocks. Oh yeah, there we go.
Everybody named Mama want penny stock. I mean, I was looking real good in the penny stocks once you mentioned when you mentioned natural gas and oil. I was like, ooh, they got a decent amount of penny stocks up in there.
Yeah, they do. Yeah, they do. Yeah. I mean. Oh shit! But I mean, when you do China, like look at these stocks, like Tiger, Futu.
Yeah, I saw Tiger.
These are some bad boys. I mean, I used to trade them back in the day, but this is some risky stuff. But I would say, like, if China's really stimulating their economy, this is how you make. Yeah, you make the big bucks because they can rocket to the moon for no reason just because it's just. Oof. Especially when they are incentivizing people to buy stocks in China.
I just realized the market's closed right now.
Yeah. That's when I started my stream. Yeah.
Hold on. What time does the market open? Yeah. What time does the market usually open? Like, what's the time frame?
You got 12 minutes.
Well, for him, yeah, futures opens,
Well,
but
yeah, I know.
for normal
I'm talking. Yeah,
normal
for
market,
normal stocks. For
like
normal stocks.
9, so it's 9,
9:30.
yeah,
9:30
9:30 Eastern, yeah,
Eastern.
Okay, so what's the closing time?
4.
4.
Well, I'll make this purchase tomorrow, I guess. I'll check tomorrow. I hope I'm making sure that I gotta keep rig low, and so I'll buy it while it's on its downturn right now. I will I'll put a pin in that tomorrow.
man, yeah, man. This is oof, 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 oof. Yeah, so mining stocks, silver miners. Yeah, I don't know. I bought this sucker around like $2.50 to $3. It's hanging around 4. Yeah, we'll see. We'll
I'm
see
gonna
if
start.
gold and silver continues. Gold and silver still has to break out. So gold is, but not silver. You need both. Yeah, you need both. Copper too fell back. So
Mm.
you need.
Does trading view cost?
Only
I mean,
only if you want live data.
yeah, if you want future, but that's why, yeah, you don't, if you don't really need live data, you don't really care. But then they started cutting away how much like you can do. Like you can't do how many more than 2 indicators. And like they started like stripping away a lot of the free
Yeah,
benefits.
they have 3 packages if you want to buy.
Yeah,
I got
they got the essential, the plus, and the premium. I'm looking at it right
yeah,
now.
I have premium. That's what
But
I
if
have.
if
But
if Gary, if
but
you got like
you don't even
Charles Schwab,
have
right?
you
You got
Yeah, I
Charles
do.
Schwab. Just do
yeah,
think and swim.
think it's
Yeah,
one, yeah.
you don't need this. I mean, just get used to that. Yeah,
Okay.
yeah. You don't need this.
Good God, the premium is like $50.
Wait for Christmas, then you can buy cheaper. They usually have a deal like that. Yeah, you just buy on the holidays. You don't buy during normal. Yeah.
Yeah, I guess I will
Yeah.
wait.
Mm-hmm. If But man, yeah, China, man. I'm like, oh shit, China. That's
Yeah,
what I thought.
net China. I am waiting for the for Trump's next speech when he goes hard on China.
Yeah, really, it really depends too much on that. Nah, because he likes to talk bad shit about China all the time. That's kind of like, fuck. You want to keep it? You want to dump it? Because right now it's overextended, way overextended. It's just like, to me, if it really, it's gonna do this. It's gonna bounce, and then rocket ship like later on next year. That's what it's gonna do. But I'm just guessing. I'm just guessing because I think a lot of this is because the U.S. buyers are chasing, because China is the most undervalued of the emerging markets. A lot of people, they don't want to buy Indian stocks because it's overvalued. They're kind of scared of Mexico right now because of the new president. So a lot of people are like, well, I mean, yeah, you got Xi Jinping, but those stocks over there are way cheap. So who cares? It's worth the risk now. You know, all those guys that got freaked out, got scared out right here. There's just like, yeah, it made a perfect double bottom right here. And it's just like, this is a perfect base. Oh man, come on. Yeah, you definitely should have got in, but yeah. I think when Jerome Powell did their interest rate cut, it was just like, they just said like, oh, thank God United States isn't raising their interest rates or keeping their interest rates too high. We're just gonna jump in with our stimulus. Same thing with Japan. Yeah, same thing. So that's why looking at Japan and China, it's important. Even you don't like, yeah, the way the yen moves, and the way China does this credit impulse with the loans. That's just how it works. Bank of Japan raises rates first time since 2007. Yeah, that was way back here. Yeah, everything just goes back to that, man. The yen carry trade. That yen carry trade. I probably should do a stream just on the yen carry trade. That's like so important. And I think Warren Buffett he did a superb job like benefiting from that. He just bought it. He probably bought a ton of Japanese stocks at that point in time. That's why he dumped Apple probably.
Oh,
He probably just wanted more cash to buy more Japanese stocks. But once you know that stuff is already months too late. Everything is like, they already did the trade. You're too late. Yeah, let me just go over it now. All right. Carry trades. What are they and why are they impacting the global economy? So this is August 20th, 2024 article. The Japanese stock market collapsed in early August, causing knock-on effects on the global economy. Carry trades, borrowing in low-interest currencies to invest in higher-yield assets, played a significant part in the collapse. The World Economic Forum's latest chief economist outlook sees interest rates gaps widening, which could add to instability in carry trades. A welcome period of relative stability in global markets has been upended by a sudden plunge in stock prices. It began on the 5th of August in Japan and rippled quickly through Asia, Europe, and the US, setting traders on edge over fears of a recession in the US. Man, that seems so long ago. Like the narrative changes so quickly, right? So far, so simple. But behind those fears of a US slowdown was concern over the stability of an investment strategy known as a carry trade. Okay, Nikkei versus yen. Japanese stocks collapsed. Blah, 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 blah. Yeah, okay. Yeah, you see that? Yeah, Nikkei versus the yen here. By the end of day's trading, Japanese stocks listed on the Nikkei index had seen their biggest daily fall in history, eclipsing the devastation of Black Monday way back in 1987. Alongside the fall in stock prices, the value of Japan's currency spiked. To understand the significance of these entangled metrics, we need to unpack the concept of the carry trade and how it can lead to such volatility. All right, what are carry trades? A carry trade is an investment strategy that involves borrowing money in a currency with low interest rates and using it to invest in stock and bonds based on a currency with high interest rates. The goal is to profit from the difference in interest rates while hoping for favorable exchange rate movements. Reuters says the Japanese yen has been a popular choice for carry trades due to Japan's long-standing policy of maintaining extremely low interest rates. Investors borrow yen at these low rates and use it to buy currencies like US dollars, Mexican pesos, or New Zealand dollars, which offer higher yields. They then invest in bonds or other financial instruments in these higher yielding currencies. Carry trades can be quite lucrative when conditions are right. For instance, the difference between US and Japanese interest rates has allowed investors to potentially earn annual returns of 5% to 6% on dollar yen carry trades. So, what went wrong? There are several interlinked factors at play in the recent unraveling of yen based carry trades. Firstly, the Bank of Japan recently raised interest rates from nearly 0 to 0.25%, marking a shift in its long standing monetary policy. While this may seem like a small change, it has big implications for carry trades. The impact of Japan's decision was amplified by expecting expected interest rate cuts in the U.S. over fears of a looming recession. You see how long this was ago? Like 2 months ago, people were thinking of a recession, and now we're thinking like, things are fine. But now we're thinking about inflation, right? So anyway, this led to a strengthening of the yen against other currencies, including the U.S. dollar. The yen has appreciated by 13% in just 1 month. Now remember that carry trades rely on wide gaps between interest rates and currency prices to deliver a return for investors. The combined effect of the recent market moves was completely wiping out the slim gains in pure yen dollar carry trades. This evaporation of profits sparked a sell-off as traders looked to offload high-risk assets, which now burdened them with higher borrowing costs, low zero profit margins, and losses in asset values as shares spiraled downwards. A massive global carry trade unwind was a spark that lit the fuse for this market Armageddon. One defining characteristic of these self-perpetuating market melts is a vicious cycle where a sell-off increases realized volatility. Okay. Yeah, I don't think I need to read that. I think we know what happened after that, guys. But you see that? Narratives change so quickly. Man. I mean, that feels like a decade ago to me. I was buying that dip. I didn't give a fuck. I remember everyone was panicking right here. August 5th, right here. I was like, oh, hey, everything's collapsing. The world's collapsing. Yeah, whatever. I mean, the same thing is happening now, right? We'll see. So October, guys, we got a strike on the East Coast shipping. We got Iran ready to start World War III again. I mean, for the 10th time. How many times have Iran started World War III? I've lost track. But they're going to start this time, right? Yeah, there you go. So, and who knows? Kamala's going to say something. Trump's going to say something. You guys know what to do. Keep your money fresh. Keep your powder fresh. It's time to buy. That's about it. Man, you got a king size bed, 12 man? Oh, shit. Oh, shit. WW3 ticker to go into the moon. If you're going to get a WW3 ticker, that's probably gold and silver. I mean, I don't know. Let's look at gold. Yeah, gold and silver, baby. Yeah, well, silver, I don't know. Gold, yeah, for sure. Gold. And later on this year, I'm going to be looking at palladium, platinum, things like that. There we go. Yeah, there we go. This palladium and platinum. Palladium, platinum. Yeah, I'm going to be looking at this in December. We'll see how this goes. Maybe a good time to get some palladium and platinum. All right, it's 2 hours, 8 minutes. Anybody want to say something? Anybody want to get a question? I'm just going to be back here later tonight. I'll just talk Wyckoff again. We can continue our Wyckoff discussions. Do your homework. Oh, yeah, do your homework, guys. Let me see. Do your homework. PDF. Range. Yeah, this is your homework, guys. Do this. Let me get it. This is your homework. Do your homework. Read that paper. It's been your homework for a while. Anatomy of a Range by Jim Forte. Okay? You should read this PDF. Tell you about distribution, accumulation, learn about the Wyckoff theory. This is what you should master. Once you recognize patterns like this, it shouldn't be hard to figure out where things are going. That's your homework. It's only 12 pages. Come on. Shouldn't be that hard to read. We'll go over more of it tonight. I'll be back midnight if you're around. Doesn't matter if you're not around. Well, then, well, you can just do a replay.
This bitch kind of short.
Yeah.
Yeah, this bitch short.
Tomorrow, let's see, what's tomorrow? I got it on Eastern time. 8:15, ADP employment change. They don't care about that. Stock market doesn't really care about that. 7 a.m. is MBA mortgage rates, 30-year. Probably don't care about that either. What's going to be interesting is how the oil demand for reports affect things. So 10:30 a.m. Eastern, crude oil, gasoline stocks. We're going to have the Cushing crude oil, like all the gasoline production change, all that. Heating oil, which means diesel. So all that stuff will happen. But what's going to be important is Thursday, 10 a.m. Eastern, ISM Services PMI. That's going to be the most important thing. And then Friday, the big boy, unemployment and non-farm payrolls, 8:30 a.m., 1 hour before the stock market opens. That's going to be all, end all of whatever we talked about today. Yeah. That really is it. I don't think anything else, man. Gary and CKJ3, anything before we leave today?
No, I'm good.
You good? You guys good? Fun and games all October, I'm sure.
Yeah, I think CKJ he's probably doing something as we speak.
Yeah, he market's open for him. Futures are open right now. I'm just in natural gas. I don't care. I'm just gonna keep holding that bitch until it like gets my target. Come on, natural gas, keep going.
I'm reading a PDF.
Yeah, I mentioned that PDF a while ago. Yeah, it's not that long. It just
Yeah, it's not. Yeah, this thing kind of short. Not gonna lie.
Yeah,
I thought this would be a book, be a whole ass book, but
no, I try to keep everything simple, man. So you don't need to know much to make money, honestly. Bitcoin right now though is looking like shit. It's back to 60. Oh boy, $60. Let me see this. Oh man, this doesn't look good. This was exactly what I was afraid of. Because the thing about Bitcoin, like every last Friday of a month, that's when the options expire, the futures expire, everything. So after that Friday, guess what? The Monday, Tuesday, it just drops. Because it's like the market makers probably got the money that they wanted to make by killing as many options gamblers as they could at around here, 65,000. Once they were done with them, they're like, give it back to the market. And now it's just like, damn, boom, boom. Right. Oh, man, this is crazy. This is crazy. I don't know. But I would say if you're are a bull of Bitcoin and crypto, I would be looking at the miners right now. So like Mara. I mean, this is what I bought like way back when here. When it was $7, I sold it at 30. Like this is the time to buy it back. Like this month. So let's start watching Mara, okay? Remember Mara, CLSK. That's another one to buy. It's below all these supports. Watch it. CLSK, Mara, MARA. Watch it. If you like doing options, there's a ton of options for Mara. They're very liquid. So I'm sure you guys who are really uber gamblers and want to bet on a long-term Bitcoin crypto move during the elections to after the elections, yeah, it's time to buy the dip on those this month. So watch them. Watch them. The other ones are like, I don't know, Riot. I don't like it. Riot. Wolf. Wolf is like what Gwyneth Paltrow bought. Gwyneth Paltrow bought Wolf. I don't know. Yeah, I don't know. Yeah, that's her Bitcoin mining company. You guys want to do it? Fine. BTBT Chinese Bitcoin company. Okay, yeah, well. There's a ton of these crypto like mining companies. You just got to figure out your own way. But the two main ones for me, Hut, yeah, these are Canadian, which basically means Chinese. CLSK, okay, Clean Spark, and Mara, MARA, Mara Holding. This boy is what I'm waiting for. If we get to the right price, we can buy it. Okay, guys. Yeah, that's about it. Oh, Portia, you want to come up here? Do your homework.
Hey, Portia.
Read this PDF. Do your homework. Start Discord. I don't know, man. Discord.
Nah, I don't think you should start a Discord. Nah.
I mean, we were going to at one point for this whole channel, but I don't know. Like, shit.
I don't think you should start a Discord because you're good. You got good people. I was going to say, do you know any good mods?
So you think I have to actively manage it like a motherfucker? That's the problem? Oh my god.
In order to have a good quality Discord, yeah, if you do, but I wouldn't recommend it, no.
Unless I just go to Denison's and say like, hey, can I have a sub in there or something?
He might, if you ask, he might let you.
Yeah, that might be better. Let him like deal with it. Like say like, hey, since you regulate shit so well, I'll just hey, can I get a sub in your thing? And then
he already has his own trading channel, so his own
that might work.
Section,
that might
you
work.
might be able to just be added to it.
Yeah, if I once I get through this October and set everything up more organized, that might make more sense later in the future.
Crack, aren't you already on Discord though?
No, I do have an account way back when, but once I saw what the hell it was about, I was like, oh hell no, this is
Discord
crazy.
Discord
You guys
kind of
are nuts.
But if you only stick to finances, you should be fine.
Sometimes those Discords get nuts too.
Yeah, they do.
People start going off the chain.
Don't worry, it all gets fresh when the porn bombing starts.
Like if you're gonna porn bomb, at least give me good porn to watch. They never give you good porn.
They give you the freaky stuff, the stuff with like scat, the stuff with dildos.
I'm like, I don't want that, dude. Give me good shit. This is god. Yeah, terrible taste. You guys have terrible taste.
And plus, not to mention, you will need security if you were to manage your own Discord, because people sneak in all the time depending on the server, especially if it's really popular. And you got to weed out a lot of people. You got to weed out inactive people, but they aren't too much of a problem. They're just kind of sitting there taking up info. taking up
Uh-huh.
space, and then you got to deal with like I said, the porn bombers and the trollers, the people who keep breaking Discord guidelines just to get up in there.
10 cent. All right, 10 cent. 10 cent owns Discord. Let's see. Man, it still haven't. It hasn't broken that resistance yet. Mm-mm-mm. Yeah, 10 cent. 10 cent's like chart is very interesting.
What's it at now? 57. Yeah.
Yeah, you see this. This was when China started like cracking down on tech companies. Yeah.
Yeah, so that they can have full control over the industry, at least in their little
Yeah.
area. What's that Chinese version of Discord called? What is it called? I think it's WeChat or something like that.
Is WeChat a Discord like clone too now? Huh.
No, it's more like a.
Man, I didn't know that.
What's it
Yeah,
called?
because
It's some type of. Oh yeah, it's a messenger alternative.
yeah, that's definitely owned by Tencent.
Uh-huh.
They used to have Tencent QQ. I used to use that, but I guess they left that too. Oh, okay. WhatsApp. Yeah, WhatsApp.
I don't know what their stock is.
Let me see if there's Chinese Discord. Chinese Discord. Discord is completely banned in China.
Yeah, it is.
So Discord is owned by China, but it's banned by China at the same time. Oh, that's great. Yeah. Let us have all the problems in the U.S. with Discord. Yeah, give us all the infected people. What the fuck? Oh man, China, man. Let's see. Clone ripoff. Is there a Chinese Discord alternative?
I thought WeChat was it. Hold on.
Yeah, apparently it is. I didn't know WeChat would be that good though.
Yeah, WeChat's been spread out in order to do a multitude of things.
Should we have an experiment and open a WeChat account?
I'm not doing that crap.
I think it would be interesting to have like an insider's view of China, right? Somebody just go in there.
Okay, it's an alternative to Kick. It is to Kick, Telegram, Line, WhatsApp, and
what?
Yeah, and
it does all that?
Yeah, apparently.
Come on, what the fuck?
Yeah, WhatsApp was. I remember Elon Musk saying he wanted to. Remember when he bought Twitter and he said he wanted to revamp it to become more of a multimedia platform so he can have more investors. I think he was using the WeChat model so that they can increase the overall user base.
I mean, I know that WeChat is used for payments there since COVID-19.
Yes. Twitter was supposed to go down that same route.
Right.
In order
Remember
to
that.
in order to get in more investors, they were supposed to expand more into the not the stock market, but the financial management market, so that Twitter can be used as an alternative and it can be a central hub since it already has so many users.
Right. Jesus Christ.
Still though, I didn't know WeChat was this daggum fat. I guess they've been expanding it ever since COVID.
Yep, that's that because like I knew a dude, he lived in Taiwan and all that, but he had a house in China, and he was showing me all that shit. He was like, "Oh, this is how you do it now." I was like, "You are a senior citizen and you know all this shit? This is insanity."
I also realized that WeChat is apparently the only multimedia use app in China, period.
Yeah, that makes sense.
Yeah.
They got to centralize everything. Everything you do, they see, right? That makes a lot of sense.
Is there an app that they use to track your social credit score, or is that like a government thing? Because I know they still use the social credit score method.
They do, yeah. I don't know. Let's see how you look it up.
That's what I'm trying to do. I don't want to get I don't want to get a virus now. I just got this laptop.
Oh my god.
Oh yeah. Tropes is right. You know, was a co-partnership with PayPal at first. Maybe they were trying to integrate PayPal's financial financial application into Twitter.
I mean, did you know that Jack Dorsey tried to do something with Square and then try to expand it to something else because he was trying to do a Twitter alternative, right?
Yeah, he did because Facebook was failing and they tried to
Right.
they wanted to crack down on the whole the extra user market. It was kind of like what happened when
Yeah, it
not
was called Blue
Twitch.
Sky. It's called Blue Sky. That's
Yeah,
what it
Blue
was.
Sky.
Yeah, did it go anywhere? I mean, shit.
I don't know. Hold on, I'll look it up because I haven't heard anything from it since.
Yeah. It looks like he left the board of directors for Blue Sky, so that's dead now. Yeah, what's the point of that? Yep.
I mean, it's still up here. It's still available.
Yeah.
Let's see.
You got Dorsey's backing. What you gonna do?
Oh,
though?
it's still a payment. Still a payment management service. Okay. Yeah, it ain't going nowhere. I remember didn't PayPal I think back during COVID, didn't they threaten to charge all their users like some sort of fee if you were like transphobic or something like that?
Really?
Yeah, hold on.
I remember PayPal was like starting to like
Yeah, PayPal
delete.
was
They were definitely doing something.
Yeah, they were
but
deleting users. Hold on. Yeah, they were deleting users for being transphobic or something. Apparently, they were going to limit the amount of transactions you could take. It was some sort of weird penalty. And a whole bunch of people. Oh, here it is. It's the PayPal transphobic transfer charge. Apparently, it was some sort of it was some sort of payment fee that if somehow they would have got information that one of their users was transphobic, they would put a 30-day ban on all transactions. This was in what year was this in? I believe this was recent too. I remember hearing about this because I had to cancel my PayPal account because when I heard that shit was happening, I was like, hell no. Yeah, this was in 2021. Okay.
Yeah.
And it got a lot of shit backlash. They lost approximately 52% of all users. From 2021, from early 2021 to mid 2022, a 50% decrease in user rate. Okay, yeah, that makes sense.
Yeah, that's some crazy shit.
They real fucked up with that one.
I don't know. Shit's been wild since 2020, huh? Yeah, shit's been wild. I don't know. I haven't paid attention to that, but I mean, I gotta say, debanking and all this stuff. Hey, that's why people like Rashu keep saying like, go get crypto, and this and that. It's like, oh, okay.
Yeah, he's really Rashu's been hyping up crypto for the past couple weeks now. Like, damn. They also had apparently last year they also had a $2,500 fine for misinformation charges. This is PayPal again. Yeah, this is PayPal again. Yeah, this was last year. I didn't hear about this one. PayPal goofy right now. Jesus Christ.
I mean, I don't like them for the fact that I can't hide my identity. So yeah, I rarely use PayPal. I mean, I have an old account I never use it. Yeah.
I mean, I had to reinstate it because, well, actually, no, I don't have too many problems with Cash App. I just haven't been using it that much because not many stores actually utilize Cash App. They were like, "Hey, do you have a PayPal? Do you have a PayPal?" I was like,
Right.
I was like, "I got a Cash App."
Yeah, Venmo, Cash. Venmo,
I haven't seen much about Venmo. I wonder if Venmo's done any goofy shit lately.
yeah, I don't know either. All I know is like Venmo is like drug dealers like territory. Most of the time they'd be like, "You have a Venmo? You have a Venmo?" I'm like,
You got a
"No,
Venmo?
fuck that shit. I'm using cash, bitch. I'm not getting traced."
This reminds me of AI. This reminds me when I remember I was going through some of my clients' phones and they were asking like AI tips on how to grow weed, and I'm like, "You dumb
What?
niggas." Yeah, yeah,
They're using ChatGPT to
yeah.
tell them how to grow weed.
Yeah, they were asking about what's the appropriate. They were asking like I forgot the name of the strain, but it was like cotton candy something, and he was like,
Oh, okay.
what's the right temperature to grow cotton candy, whatever,
Oh
or
my
what type of soil do you,
god.
what type of soil do you need for what's the best soil use for the soil use for like 25 acres worth of reed growth, and I was like, damn, 25 acres, this motherfucker's trying to start up a goddamn farm.
25 acres? Oh.
I didn't look into the details, but whenever I go through, like, whenever I'm repairing phones and shit, I have to
Jeez.
go through people's phones a lot. I find some weird
Yeah.
information on there. It's mostly just porn and like people cheating on their spouses, but every now and then you get some goofy
But
shit.
yeah, that's the funny thing. It's like they just don't care about security. They just let like yeah, that's the thing, right?
They just be hitting up Google for anything. I'm like,
Right.
you niggas are getting tracked, right?
I mean that's how a lot of these cases get solved, right? They're just like, oh, this fucker
Yeah.
chased. How do I hide the body? How do I dispose? Like what the fucking retard? Come on.
Does a corpse float? And I'm like, well,
Yeah, does a corpse float? just use WeChat. That's better at least, kind of.
Yeah. Well, no, you can use Telegram because Telegram deletes all your Telegram
Oh my
deletes all your
god!
it deletes all your data once you log off, I believe.
Are you sure?
No, I don't think it
Are
does.
you sure?
I think it archives it, but it just says it deletes it. I don't know if
Oh man!
I mean, that's what they advertise.
Mm-hmm. I'm surprised they haven't been bought out yet. Have they been bought out?
Telegram?
I don't think so.
I don't know.
Yeah, it hasn't. Mm-mm-mm. I'm sure it's gonna get bought out because it's Russian. Like, I mean, it's founded by Russians, so I kind of feel like it's gonna get. Well, actually, let's see. Their headquarters in Dubai.
Really?
Their legal like entity is in the British Virgin Islands. So okay. So I guess they can like hide out for quite a while. Shouldn't be a problem.
Do they have a chain of do they have a chain of command via companies in different countries?
Yeah, that's why I wonder.
Gotta use the Andrew Tate method.
Yeah, this shit seems too complex. I don't like to do this.
That's what the FBI do.
Yeah. Because like you look at like Sam Bankman-Fried, you look at like Binance, right? Look at like CZ and all that stuff. If the Americans fucking want you, they'll get to you. That's the thing. That's the problem. Like it's really hard to get away from their reach. Yeah. Like yeah, so a lot of these guys, oh yeah, I'm in Dubai. You can't get me. I'm in this place. You can't get me. It's like, all right. You think that. Yeah, I swear to God, he got into trouble. Yeah, 2024. So the one of the founders of Telegram. Yeah, see, he was arrested in 24th of August. I think John covered this a little bit. Yeah, from France. It was France. Yeah, so he was arrested upon exiting his private jet after landing in France from Azerbaijan. Durov's arrest was based on an arrest warrant issued by the French Judicial Police as part of a preliminary investigation in relation to 12 suspected violations regarding crime on the Telegram platform. Yeah. Yep. Yeah, that's what I thought.
What, did he use it as a circuit or something?
Yeah, I don't know, man. I don't know exactly what he did. Like the original thing. Oh man, it's in French. Shit. Duale, can you read this for us?
Well, he ain't here.
Fuck, Duale, get up here.
One time he ain't here.
Yeah, because the English stuff is it's just very bare, you know. It's not. Oh my god. Let's see what the English. Blah 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 blah. Yeah, I don't know. It's man, this is hard to tell. I mean, shit. I think it's better if we got the original source. Duale, get up here. I can't read French.
You got a translator?
Oh fuck. Yeah, it's in PDF, so that's the problem. It's what the fuck, you assholes? Communiqué des pressés. Fonditure et d'élégant de l'émergence de. Oh my god.
Boy, you better quit. You're gonna summon some type of cheese demon up in here.
Oh, cheese demon? Yeah.
Yeah.
Yeah, whatever. Ah, fuck. Yeah, that's pretty interesting. I think yeah, John followed it for a couple, at least several streams. I didn't follow it too much, but since you brought it up again, it's just yeah, that's definitely something.
All right.
Oh, I can read this. Complicité. Detention of images of minors present pedo pornography. Uh-oh. I can read that.
Wait, really?
Yep. There you go. I can read that. So he's got some pedo porn, which might have been, well, anybody could fucking get you on pedo porn though. They could sneak that in your fucking hard drive and be like, "Oh, we got you, bitch." That's the problem. You got to be careful these days. Got porn bombers. Yeah, if the government wants to get you, they get a pedo charge. It's easy to do, man.
Oh, dang.
Yep, there you go. Suck. That's the third charge. I can read that. I don't need no French to read that shit. I got it right here.
What was a stupid amount of porn or something like that?
I don't know. It just says they got some image of yeah. Pedo porn. I mean, it's vague. It's very vague. And then you have another second charge of an organization is you got the collecting pornographies of minors or some shit, basically disseminating it. That's what they're charging him of too. All right, see, they got you on two of those charges. That's it. That's enough. Yeah, that's enough.
All right. So, okay.
Yeah. Yeah, people gotta be careful, man. I mean, you remember that gun that kind of I think he made custom guns, right? 3D printed guns in Texas. There was
There's more. There's more than one case of that though. A lot of people
yeah,
try to make
but
3D printing.
this guy ran to Taiwan. He basically he went to a hotel for a girl, and that girl turned out to be underage, and they got him. They got him, quote unquote, right? That's how they got that dude. So yeah, a lot of people gotta be really careful.
Yeah, I found a
Yeah.
video. Yeah, I found a video of him. Oh shoot, he was a.
Yeah, you can play that.
Hold on. Yeah, I'm gonna share my screen.
Mm-hmm.
Not that one. I gotta do all this stuff because freaking StreamYard has a stupid little glitch to where whenever you share screen, the share button doesn't show up. So you have to full screen it just to make sure that you can actually click the button. So daggum retarded. All right, I'm showing it.
Yeah, I see it.
Let me press play.
Oh, there you go.
Can you hear it?
Yes, let me see.
I'm sharing the audio, so you should be able to hear it.
No,
Unless...
I don't hear it. Yeah.
Hold on.
Oh,
there you go.
we are. It doesn't matter anyway. It's Taiwanese. It's Chinese, bro. Oh my god.
I don't know what you talk about. Crack, it's your native language.
Oh, it's my native language? No, it ain't.
I don't know if it is or not.
Can't understand this shit. What the fuck?
Taiwan and US authorities have arrested an engineer for making guns using 3D printed parts.
他用这个3D 链的这个技术，来把这些枪支的，包括枪身，然后做一个制造的这个情形。本局也会持续的在跟美国还有其他国家的这些执法单位进行情报合作的交流，维持社会治安。
The suspect, surnamed Zhang, smuggled firearm parts like firing pins and barrels from the United States. He then allegedly used an industrial 3D printer to complete a dozen guns. Zhang faces up to 10 years in prison for smuggling the gun parts.
Oh, damn. Yeah, let's see. Yeah, that's right. Jeebus. Yeah, so oh man, that dude was arrested for I think it was Texas. I think he was with some underage girl in Texas or something. That's how they could get a warrant.
Yeah, that's
how it started. I think they planted they planted on him. That was it.
Were there any other plants like that? I know a lot of convicts escape to Taiwan pretty frequently.
Yeah, I don't know why he went to Taiwan though. It's like it's like, come on, dude. They have an extradition treaty. What the hell are you doing there?
Mm-hmm. Do people do this like really frequently?
Not sure. I mean, I remember he was on like a bunch of shows before he got arrested. A lot of right wing like type of that was back in like the 2016 eras, type of stuff. 2016 to 2018.
Oh, okay.
Yeah, I think you could find it out pretty quickly. Shit.
Is John still streaming?
Yeah, okay, I got his name now. Cody Wilson.
Oh, okay.
Yep. Gets probation in child sexual assault case. 2019. Yep.
Oh, dang.
Yep, there you go. I got the article. Yep,
Oh,
said it.
okay. Hey, get cracked. Somebody's in the back.
Yeah, I know him. He's the troll from the Michael Jordan shit.
What's his name? Oh
You
God,
remember
it's
him? Yeah, you remember him?
I remember him. Yeah.
Oh yeah. Are we gonna talk about like Larry Bird and like we don't got
Yeah, I
time
was
for
going to
this
say
shit?
I was going to say I'm not real big into basketball.
I'm not giving fucking entertained. That's just like when was the last time we're gonna talk about like come on, bro, like Michael
I don't.
Jordan, Larry Bird. What the fuck? No. You gotta
I
talk
mean,
about
yeah, Mella's back here.
Mella.
Okay.
What's up, Mella?
I'm trying to find out which string is which.
Oh,
Uh,
your
Yeah,
mic,
Mella,
your
your
mic.
mic is messed up.
oh, my bad. I'm on headphones. Sorry about that.
Oh, you're good.
Maybe I should retry.
Let's see. Okay. Hello. Oh man. Hello, Mella.
I think she can't. I think. Oh wait, she's still here.
Yeah, she's still here. Hello. Oh man, she left.
Oh, yeah, she left
All
again.
right.
All right, and she'll come back.
I mean, I have no time to talk about basketball.
Still though, I need to. You need to keep telling people stop using Bluetooth when you come on StreamYard. It does not handle it well.
I mean, is this guy gonna talk about Kareem Abdul-Jabbar next too? I mean, might as well.
Probably.
Yeah, might as well. That's more interesting. All right, 3D printer gun designer Cody Wilson gets probation in child sexual assault case. Uh-oh. He pleaded guilty to injury of a child and will be required to register as a sex offender. Oh, man. If only he had better lawyers. Cody Wilson, the Austin man who gained national attention for attempting to make blueprints for 3D printed guns available online, was sentenced Tuesday to 7 years of probation in a child sexual assault case. So this is September 12th, 2019. Okay, guys. Last September, just weeks after announcing plans to publish the firearm designs on his website, Wilson was arrested in Taiwan after being accused of sexual assaulting a 16-year-old girl. He pleaded guilty to injuring a child, a third-degree felony, last month. A Thursday news release from Travis County District Attorney's Office said that Wilson had sex with a 16-year-old girl in his room at Archer Hotel in Austin on August 15th, 2018, paid her $500, then drove her to Whataburger. Shortly after, she called local authorities and filed criminal charges against Wilson, according to the release. An arrest affidavit filed last year in Travis County said Wilson met the girl through SugarDaddyMeet.com, where he used the screen name Shanjuro. Yeah. I mean, honestly, this is why things, if you're doing something gray, gray in the gray area, this is where things get really dicey. You're going to watch underage porn. You're going to meet some girls. You better make sure they got IDs on them. Maybe they got fake IDs. That's the problem.
Oh God,
That's really the problem, man.
You're really gonna have some daggum Taiwanese ladyboys trap you up.
I mean, the thing is, he got trapped up in Texas, and then he ran to Taiwan. He should have just ran to Russia right after. That's what Snowden did, didn't he? I think he ran to Taiwan first, and he ran off to Russia because, like,
I thought it was Russia. No, I thought it was Russia then Taiwan, because I thought I believe so. I think it's because the what's it called was after him, the Russian government.
Nah, Snowden's still in Russia, man.
Wait, really?
Yeah.
Okay.
Yeah, he's still in Russia, but he fled to Taiwan first, I believe. Yeah.
Oh, okay.
I believe. I'm not sure.
Hold on, I'll be back. I need to plug my laptop right quick.
Mm-hmm. Yeah, let's keep reading this. In addition to probation and registering as a sex offender, Wilson must install monitoring software on any device he owns that can access internet, pay $4,800 in restitution, and perform 475 hours of community service. He must also attend sexual offender treatment programs. Oh, great. Yeah. I think that's pretty much it. He shouldn't have done that. He should have been very careful about what girls he met on sugardaddy.com or whatever the fuck it was. So this is the Telegram dude here. If you read here, complicité, detention de l'image d'un mineur
I got it in
présentant
French.
un caractère pédopornographique. So I think that's pretty obvious. The complicité diffusion. That means like he must have disseminated it, right? Offre au moussin des dispositions en bandé des images des mineurs présentant un caractère pornographique. Okay. So I think that's pretty clear. Hey, you guys do some sketchy shit. Don't be trusting people on the internet because they might just dump a bunch of pedo shit on you. And if you go get some hooker, you better make sure they got ID. They got their like. You better verify that ID wasn't like like faked. Like this is crazy, right? This is how the government gets you so easily. So it's just I don't know, guys. You better be a monk at that point. I think you gotta be a monk.
Yeah, you probably. Yeah, I bet you do.
Yeah,
Or it's either that or you gotta be a part of the government yourself. Be one of them,
right.
You gotta be one of them. Being one of them CIA sponsored crimes.
Mm-hmm. So is you got anything to share? Got nothing to share? Got something to share? Let me put the homework back here. People, this is your homework. Your homework is not porno or hookers. Your homework is this. Read this PDF. It's like seriously, can you just read this? It shouldn't be too hard for you guys to read.
Yeah, I'll probably bump this out in like a day.
Yeah, this is.
I don't think it'll take me a day to read. I think it'll probably like by the end of the day I'll be able to done reading it.
I mean, the problem is that like it's not the concept that's hard. It's like putting into practice. So you gotta really be practicing how to look at charts all the time and doing that. I mean, I don't try to talk about candles too much per se, but I probably will tonight. I'll probably focus more on that. But to me, it's more about like the structure, right? You kind of see, you try to see if it's not going to look exactly like these structures, obviously, but it's sort of like you got to recognize, hey, this kind of looks like it's going to drop because it looks more like this, or it's going to go up because it looks more like that. Yeah.
Hey, GETCRACK. Apparently we're simulcasting right now, and there's an entirely separate chat that is looking for the link.
The heck?
Yeah.
You are?
Yeah.
Who's simulcasting us? John?
I have no idea. It might be John. Hold the heck on. Let me look at the chat. Hold on, let me look at the chat right quick. Hold on, let me check it. Because I see 2 lives. As usual, there's no other lives, and both of them are simulcasting what we're doing right now.
Yeah, okay, I got it. I put.
Yeah, no, I saw it.
But where? I thought that Ben Thorpe was supposed to be on the other chat. I'm on this
Nah,
chat.
nah,
Ben Thorpe is on that chat.
Ben left. He been left.
Yeah, Mello like kicked Mello
It's
left.
just, it's just we got 2 streams going right now. For some reason, they're both on us. I don't know what happened to John or Portia. I think they just dipped. Portia was here earlier, but I don't know what happened.
Oh lordy.
Ah,
Well,
God.
yeah, that's good.
Well, I guess you're running the
guess.
show now since you're on both streams.
Yeah, I see. Yeah, I see that. It looks like I've been on both streams for a while.
Yeah.
Oh shit. Okay. Well, it don't matter. I don't have no idea what's going on.
Well, you got a topic.
Let's see. What's a topic? What's a good topic?
Did John go through all these news articles already?
Hola, ¿cómo está?
Hello, Portia.
¿Cómo está?
¿Cómo está? I don't know how do you say konnichiwa? How do you say it? How do you say hi? Crack.
I thought it was hello, hola.
Oh,
Like, I
Lord.
don't know.
Hold on.
Konnichiwa. What the fuck?
Let me leave the other one. I'll let it keep going.
You talk about Japanese, Chinese? What?
I don't know. Yeah. So since
Moshi.
Ni hao? Ni
hao is definitely
I hear myself. Oh, I had all of it going. Okay. My echo should be good. Yeah. So since you were live on yours and I had to leave work and come home, I started to restream the stream from earlier, and then I was like, oh, well, Crack is live, so let me just stream his stream.
Oh, okay.
Yeah. So I'm here. It's just, I was just, I could be in 2 places at once, but if I am in 2 places at once and I try to talk, there's going to be an echo. So, that's all. But I figure since you were live, I would play that for the other stream, because John was actually, he was there when we started the other stream, but then he left. So I was like, oh,
okay.
Okay, well, let's play it from earlier until I get home. And I'm like, oh, well, Crack is on. He's talking. Very interesting. Let me just show that. So, but the other one is going to, let me see. Oh, no, because I actually exited out of it. But it's been going for like
you restreamed the gray stuff and like, what is going on here?
Yeah. Listen, Crack. I don't
know what is going on half the time. I'm like, oh, the Grace is back. It's like, oh my god.
No, but it seems like, but it does seem like it feels like it's live and what's happening right now, right?
Yeah, it's only like a 2-minute delay from what I'm seeing. So this is a pretty good way to make a stream transfer.
I mean, that's what I did this weekend.
Ooh.
That's what I was doing this weekend. I was just restreaming. And everybody was in the chat talking about, where's the link? Can I call in? I'm like, they really think this is live right now.
Yeah, you can kind of tell what's a restream and what is it, especially if there's like a little bit of a lag to the video. Yeah.
No, this weekend, absolutely not at all. Everybody thought it was live. Everybody wanted to
what?
And then Stanley, he was having to listen to himself and listen to how he sounded. And Stanley actually really felt away. He felt away about listening to himself. And because he could not tolerate listening to himself and how he sounds, because some people, they don't listen to themselves back.
I don't like it either, but it's like, come on, man.
I don't really mind.
I don't like it either, but Stanley, he didn't like it either. So you know what he did? He logged in. I took that video down. He didn't want to hear it no more. He didn't want to hear himself and how he sounded. And so then it just went on that way. But I was just like, yeah, like on the weekend. So like Crack, like me, you, Stanley, John, HB, like we can like take a break. You know what I'm saying? Like we could just replay, some of the streams from the past time,
So the mainstream has nothing now. I mean,
no, it doesn't.
Oh
yeah. It's disconnected from our.
Yeah, Portia, you can put it back up if you want.
Yeah, I thought it was an echo.
No, there's no echo.
Man, this is crazy. This is crazy.
Here we go. Let's see. It's probably going to be an echo. Can y'all hear it?
I can, but it's very faint.
Oh, okay. Well, if it's faint, yeah.
Yeah, I can see it now. Wow. All right, man, this is crazy. Yeah, you can just do a rerun. That's fine.
Yeah. Y'all really about to make this like a YouTube, not a YouTube channel, but like a TV station or a TV channel.
That's what we were trying to do, right? That was the
About
whole
to do
goal.
some scheduled reruns.
Yeah. Do your homework, kids.
Yeah.
Yep, like you said, Crack. Do your homework, kids.
These guys ain't gonna do their homework. I'll be like, they're just complaining. I want to make money now. I want to.
Come on, come on, Crack. What are the stocks? Give me some stocks to invest in. Come on.
I mean, I would.
I was like
really,
that early.
yeah. I
I was like that earlier.
mean,
I was
damn.
like, I want to do rig. Come on, just Crack. Let me look at
Man,
rig.
last week, HB and I were talking about the Chinese stocks. Like, I did not know it would just get pumped all week. Otherwise, I would have just told you to get those ridiculous, stupid Chinese stocks.
I mean, there's still a couple of Chinese penny stocks that are looking really good right now.
Oh my God, it's such a risk. That's just the problem. Like, everybody looks at the reward. They just don't look at the risk when, like, that's the problem. Remember John talked about the risk premium?
Yeah,
when he did
I remember that.
That's risk premium. Yeah, it looks good when you're winning, but what happens when you're losing? Like, you got to think about that. So yeah, like 2020 says, like, I should have got that shit, but 2020 might have not told you, like, hey, like, it would have been done in 2 days and fallen right back, which usually Chinese stocks do.
Mm-hmm.
They pump like a good 2 days and then collapse. But guess what? The thing that happened was that the US guys, they went on CNBC, Bloomberg, and started pumping it. They were like, oh, it's a great time to get back into Chinese stocks. It's a great time to get back. See? So then when the US market opens, all these idiots were just buying. It's like, oh, there we go. Here we go. So personally, yeah, I wouldn't have done it, but maybe HB did. I know he's more of a gambler. He might have taken the shot. It's kind of like how Palantir went for him. Like, I never recommended buying at that time because to me it's like the risk is just too high. I don't want to tell people, hey, buy it, but he did it anyway on his own volition.
He did say he made some money off Palantir.
Oh, that's like 100%, man. Jesus Christ. Yeah. I mean, I wish I had a crystal ball and could, like, just tell people, like, do this, do that, but I got to follow my own regimen. Like here, see? Yeah, he bought that here just before earnings too. That's a big risk. That's why I didn't recommend it. I mean, if it didn't have earnings, I would have said, like, yeah, sure, go ahead and buy it. But because it had earnings, it's like, that's an added risk. And it's like, I don't want to take that. But after it had earnings, which wasn't that great, it was good enough. Guess what? They just did press release after press release, pumped that thing. So if you bought at the absolute low of that week in August 2nd, 21, that's pretty much 100% because it almost got to 40, right? Jesus. Crazy. That's a good trade. So same thing with the Futu and the Tiger and all that. Yep. Yeah, I mean, it's always good looking at it from hindsight. That's why trading is such a hard thing to do. It really is. It just is. But when you looked at the overall long-term charts, you look at the weekly like I did. See this? That's why I did the Wyckoff here. Look at that. It's just exactly like it is. You got the stopping action here. You get the automatic reaction. You get the test at the bottom. You do it back. You do the spring right here. You move back up. It's like, of course. Why not? If you bought here in August, yeah, sure. Or if you took your chance and bought in April, yeah, that made a lot of sense. But for me to tell people to buy it when it starts jumping up like this, no. I rather tell people to buy it when it just pulls back a bit. This is like right now it looks like a red candle because we have a Chinese holiday overnight. If it follows the US, it'll be up here a little bit, but still, I have to see proof before I tell people to get in. That just ain't worth the risk to me to tell people to buy it. But that's just me. A lot of people, they're willing to jump in feet first. Go ahead. That's the difference. Yeah. Hey, Ava's on. Okay, Ava, we're doing a restream on my on my dual stream. So this is a different stream. Oh man, Jesus! You just I glitched out for a minute. I don't know because we're doing a restream, so I have no clue, Ava. So
can y'all hear me?
Yeah.
Okay, I had to make sure. I just had to go ahead and pull out my other computer so I can make sure that, because there's like a
Ava says like she's going to the library and joining in 15 minutes.
So I mean, I wonder which stream. So it could be this stream or the other stream. Hey, listen.
Oh my Lord.
I don't like streaming from two places because it kind of splits the audience. But, hey, I guess it is what it is. I just figured since you're live, like, why not be live with you, Like I said, like, John, he was on the other one and he left. Hey, CKJ. But, we're here with you. We are here with you. We are supporting you. We are showing you love. We are here with your charts. Yeah. And I can see the trend.
Yeah, the trend.
What I try to do, like with me, as far as math, because how I'm a math teacher, like my scatter plot eyes, I'm looking at it like it's a scatter plot, and I'm seeing the trend up, down,
hey,
up, down, up,
hey,
down.
I got something for you, Portia. I found this ancient Russian mathematics like video. Like you would like this. You would like this because it relates to Egyptian.
I want to see it.
Oh man, let me find this thing. Oh my God, this would be interesting.
Russian math video.
I think you would find it so cool as a nerd for math.
Know how much I love my math.
Oh man, this I just found this yesterday. I thought it was like, oh, this is perfect for Portia.
Oh, that's so good. Listen, I try not to nerd out that much, but I love my maths.
No, I think this is a really good way to teach kids about how computers work, because this is how man, I gotta find it though. Man, I'm so disorganized. I'm not like you. This is the problem. I am messed up.
Well, everything that you posted last night, I was looking at it this morning and I was like, my Lord, today, this is beautiful.
Yeah, I'm trying to be because you have to be. Are we gonna make a Dewey Decimal System for the clips? Like we have to make a like. I think we gotta figure out a system to like organize everything we do now.
Well, see, like on our thing, if like on the spreadsheet, I have something like that, but I have another one where I keep up with. Like, so every single time y'all say I need to clip this, or like it could be anybody in the chat that said clip this, cut that, clip this. I take a screenshot and then like I'll put the date of the stream, the title of the stream, the link to the stream, and I'll put the screenshot so I know what I need to do and I have it like all organized. But there's so many other things like I still have to because I'm working on that video, that one music video with the interviews, and that one kid Justin, whenever HB was doing the producer and playing his song, that rave music.
Oh, okay, yeah.
Then the one with Simon, and then the interviews from last week, and then the interviews before that. But then like what happens is when I'm in the middle of doing that, then we have another stream that has another interview, and we have another stream that has something else big. And it's like, oh, shoot, I need to get that. I got to get that. And then it's something big. And I'm like, oh, shoot, I got to get that. And it's just like trying to manage getting all of it. And it's like, Jesus Christ. Because sometimes, and that's why I was like, whenever I asked you guys last week, like, okay, let's do the unscripted. And then as soon as HB gets up, let's start that one. And then like John, let's start, so we can have them all separate, like with different titles, so I can kind of manage it better and know which stream to go back to. But then I'm also working on getting us monetized. So on our thing, if you saw today where I'm posting like resolved, I'm just waiting on us, you know, the decision from YouTube so we can get monetized again. So I'm working on that too. And interviews in the background. So, you know, it's just listen. Sometimes, you know, I do get overwhelmed. It does get a lot. But then like whenever I was looking at what you have and everything that you sent, I was like, this is godsend right here. Because
I'm trying to find more of the same
I'm like,
stuff.
this is beautiful. I mean, because like
there's so much content related to that stuff too.
You have your numbers, we have our, like as if it was like a literal document, like you have your numbers, like APA format, we got the stream, the actual link to the stream, you got 1A, 1B. Like, this is great.
Yeah, you know, I'm not gonna give you a bunch of trash here, but yeah, let's. So wait, do you want to end this stream and go back to the other stream?
Oh, let me come back.
Yeah, otherwise it's gonna be confusing now. If, like Ava tries to join, yeah, we gotta end this.
Okay, so you're gonna come to the other one?
Yeah. I think so.
hours.
Then I'm gonna play that Russian.
Okay. So you're at 3 hours over here, and we're at 1 hour over there. So I'll add this one to the playlist. Charting the course with GetCrack. Hey, you can make money in your sleep, folks. Oh, Crack! Did you see on the brand? Actually, let me show you, because John, he actually likes he likes that brand, even though I made that one for you. This one in the background, you can see it in the background.
Oh yeah. I know. I do like it too. But then Process was saying like, oh hey, it looks like, you know, you're getting addicted or something, or I mean not addicted. What is that? Like he's getting dizzy, like
hypnotism. But isn't that the point?
Yeah,
Crack?
yeah. See,
we want you to get hypnotized in the stocks. We need you to know.
He was like, oh, I think his ADHD was kicking in. You know, you gotta take more of your meds, man. You gotta take more of your meds.
Not Crack, but Prawn says some Adderall. You gotta take it.
Yeah, sure. We're gonna tell people to keep taking Adderall and License. Or, what the hell is it called? What's the other one? License, Lucence. I don't know. Jesus.
Yeah, so it's just like whenever you do your news, I'm like, you have your, you know, I was trying to find something I thought was cool looking, but John, he always pulls this one up, and I'm like, you're not even talking about stocks, John, but like he really like it. But I'll let you do your thing over here, and I'll just be on the other one waiting.
All right.
Thanks, Crack.
Okay. All right, guys. I'll see you on the other one. Let me get the link here. If you guys are in this one, go to that one. Okay. Go to that YouTube link I put in the chat. Go over there. We'll see ya. This is 3 hours, way too long, more longer than expected. I'll be back doing stock talk probably later tonight. I want to get as many of these things out every day for the month. All righty. I'll see ya.